Yo, 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 how is it going, everybody? Welcome to TrendSpider Live. My name is Mike, and today we are going to be watching Palantir earnings, and we will also soon be having a special guest who is Matt Caruso joining us, which is going to be awesome. He's going to be showing us his custom indicator, how you can use it on TrendSpider, and how you can use it to spot market-leading stocks. He's running a little bit late right now, but no worries, he should be here any moment, and I will add him to the stage. But yeah, if you guys are out there in the chat, let me know what you guys are watching today. We got plenty of earnings coming up. There's Matt. Let me add him to the stage. Hello, Matt. How are you doing?
I'm good. Thanks for having me on.
Yeah, of course. It's a pleasure to have you. So everybody, here is Matt Caruso. He's our special guest today. He is known for generating a 346% return in the 2020 US Investing Championship. He has a custom indicator here on the TrendSpider platform. So we are really blessed to have him and be able to pick his brain on what's going on in the markets, looking at Palantir earnings, and basically anything else that we want to ask him. Yeah, the legend is here. So welcome, Matt. So great to have you. How's
Thank
your
you.
day going?
Well, it's kind of been a bit more of the same. Markets look green, but there's a lot of red underneath the surface. So just trying to manage risk as it's right in the heart of earnings season. So it's always about like managing risk this time of year. So that's what I'm doing.
Yeah, no, 100%, 100%. Yeah, the market, if you look at the SPY 1 minute chart, definitely was kind of a bloodbath starting from this morning, right? And then kind of ever since then, we reverted back to the mean a little bit, been chopping around. So interesting day. But yeah, I'd say we could probably transition and talk about your cars indicator now, Matt.
Sure.
So on the TrendSpider platform, Matt has built a custom indicator called the cars indicator, and it's essentially used to find relative strength in the market and comparing it to a benchmark, which is normally the SPY. But yeah, before I butcher it, Matt, maybe if you want to kind of just briefly explain how the indicator works and how you use it in your day-to-day, setup.
Sure. This has been super helpful, especially in a year like this where like there hasn't been many stocks leading, but the leaders have done really well. This kind of went back to a lot of the studying I did was William O'Neill and how to make money in stocks, all that great stuff, and relative strength's a big part of his work. But when I was, I was a market maker, and a lot of the stocks I was responsible for were the gold stocks. And so, like the traditional relative strength tools didn't work. One, because I wasn't necessarily comparing the stocks to the S&P 500, which was, would be a little bit not the right comparison.
Right.
And the gold stocks, ironically, like gold's one of the the oldest form of money in the world,
Yeah.
and so it's stable. But yet, the gold stocks are some of the most erratic and crazy stocks on the market. So, like any kind of traditional relative strength tool just didn't really work out for me. And so what I started, what I wanted to build was I said, look, how can I compare an index to the benchmark, but then after adjust for that stock's volatility? So, it's one thing like we all see, like, a stock, even like a stock like Palantir, like it's nice if it's up, but if the S&P is up, 2% and Palantir is up 2% or 2.2%, it's not that strong. Like that stock should be up like a multiple of that kind of thing. So the whole idea with cars was like, how do I pull that out to look at what's the real buying power the stock versus its index? And so that's what this is. It's been such an important tool for me to always stay just like laser focused on where the money's flowing.
Yeah, no, that's awesome. That makes total sense. Always looking for that relative strength in the market. So if we could, I would actually be really interested to hear how you kind of use it in your day-to-day strategy. How do you actually find stocks, that are showing relative strength? How do you look for, sectors emerging? Like right now, kind of we have money flowing out of like IONQ, like kind of these quantum names. I know like your cars indicator is kind of flagging them on the way up. But I'm just curious if you have any thoughts on maybe the next sector that we're going to be rotating into, or what you're just looking at, in today's market.
Yeah. So again, it's been a really good year for this type of analysis. Every year is, but it's like particularly important. Like if you look at Palantir that's up on the board, I mean, look at that March, April sell-off. Like if you would have looked at any kind of moving average or whatnot, like it would have been below the averages. This poor action is breaking down. But that was just really showing, even in the midst of the correction, although it was coming down less than you would have expected if you would know like what the stock's volatility is.
Yeah.
And
down about 47% even.
which looks terrible, right? But knowing like Palantir's volatility. So if you put on let's say Amazon and you go back to 2020, I'd love to show how this like the same patterns like reoccur. If you go back to like the COVID crash in 2020.
Yeah.
There
Got
we
it.
go.
Looks like right here.
Yeah, but I think you have to load a few more bars because I'm not sure. Should be highlighted in
Let me put
SPY.
on the box there. This is SPY Amazon. Hold on. So remember we were looking at it earlier.
Yeah, we were looking at that before, and that should be highlighted. Yeah, there you go. You can see, like,
There
yeah,
it is.
yeah. So like even during the drop during COVID, like, you would have thought like, oh, Amazon had a pretty steep drop, right? So it's
Yeah.
it's falling and it falls a little bit quicker. But if even during the market drop, your stock is showing strength, what's amazing is they're always the first ones to kind of leapfrog out. So you saw it like with Amazon in
Yeah.
2020. You saw it again with Palantir this year during the tariffs.
Right.
Like one of the ways I like to use it, for me, this is like my underlying filter. Like if I'm going to be playing with the stock, if I'm going to be looking for entries, I want to know from the start that there's already like money flowing in. And to me, there's no better way to isolate that than this relative strength tool, because it factors in the strength of the stock, it factors in the benchmark, and it even factors in the stock's volatility. So it's really like a nice all-in-one tool.
No, yeah, that makes total sense. And as you can see right here, as to the Amazon point, like
Mhm.
I think the SPY dropped, around like over 30%, but here Amazon drops about 25% in that COVID drop. And the whole time, I like your point as to where, the signal is still active on the car's, indicator, even as
Mhm.
the stock is dropping, which is not always normal with like momentum following like indicators and stuff like that. Cause normally they'll get you out as the stock drops. But this one kind of finds where the money is still flowing into during any period, like you said, adjusted for volatility. So very, very cool tool to use. And I'm also curious. Well, I know you said you use a scanner here on TrendSpider to find
Mhm.
stocks that are currently starting to show relative strength. So curious how you kind of use your indicator to find stocks that are kind of emerging. Because speaking of Amazon right now, I was actually messing with the scanners earlier in our market scanners. As you can see, there's a current cars signal appearing on Amazon today, which I
Yeah.
found in our scanner. So if you go down here to the market scanner and I do skip to editor, we can add a condition with an indicator. And of course, using the cars indicator, we can just add it. There is only one signal in the indicator, which is really nice, super basic and super just straightforward, easy to use. And then you can just do signal emerged. And if you press scan, it's going to find you stocks that are, just having the signal emerge. Of course, Amazon, like I said, and then MRK is one as well. And Matt, I know you have a scan that you run. So I'm just curious how your daily workflow is, just scanning for stocks and finding, new allocations to use using the indicator each day.
So what I like to do is really like during the week, I'll look at a lot of different tools, a lot of fundamental metrics and relative
Yeah.
strength metrics, and then this is really like my underpinning of, okay, now the basket of stocks that I find interesting, because we can always kind of like sell ourselves a story. You can look at earnings. There's so many kind of
Right.
conflicting factors, and then this was always kind of a way to give myself guardrails. Like, hey, if you like Amazon, you think it's great. Well, let's see if it's actually outperforming the market. Based on as volatile. For the longest time, if you loved Amazon, you can see how this just really was not being able to keep up with like the Mag 7 and all the rest. So now finally
Yeah.
it's coming to life, and this is flagging this year.
Yeah.
But
Yeah.
there's a lot of like really interesting ways that you can kind of use this from a different perspective. Is, for example, sometimes there's like the argument like, what's better, Nvidia or AMD? And so you don't have to kind of put this up against the S&P. Like if you bring up
Right.
AMD, for example, on the chart,
Yep.
and again, this is really helpful in earnings season, because if you want to pull away like who's the leader in a group, if instead of having it versus the S&P, if you go to the settings of the indicator and you change that
Yep.
from the S&P to Nvidia, so say, look, I
Yep.
want to be in semiconductors, I want to have that exposure, but I want to compare two companies that have different levels of volatility and different all the rest. But
Exactly.
how do I decide which one to buy? Well, like if you zoom out on AMD, for the longest time, this was like the clear dog versus Nvidia. It was like the few times you want it to be an AMD is when this cars indicator was up, and that's, you can see like really where all of the true uptrends for AMD took place. So a lot of
Yeah.
like fun ways you can use this to also peel away like within the industry, which again, when I used to trade a lot of the gold stocks, it's super helpful to me, because you want to figure out where to deploy your capital in an industry. And this is like a definite go-to tool for me.
Yeah. No, really versatile. That's a great point. As
Yeah.
in, he was saying, basically, you don't have to use a regular, ETF benchmark. Like you can compare stocks to other stocks, like, semiconductors to semiconductors. You can even compare, AMD probably to something like SMH, right?
Absolutely.
which is the semiconductor ETF, to see when AMD is outperforming not just the overall market, but just the overall semiconductor market as well. So yeah,
And you can see
very
it's
cool.
interesting, like coming through that long downtrend in 2025, coming out of the tariff bear market and all that, AMD wouldn't have necessarily been on your radar coming out of that because it was lagging. But then suddenly there was a change, and amazingly, the change happened just as in June they announced all the new chips and all that, and so that real change of character, in June of this year, July of this year, where that's what got me engaged with AMD, which myself too, this was kind of a bit of a sleeper for me. And then suddenly I saw the news, I saw cars turn on, I'm like, whoa, I really need to get focused here. And so that's a good way I like to use it as a screener as well. Because it's more about trying to filter down the stocks that you think are interesting, where there's money flowing. But if you can screen, you do it daily, or there's not that many that switch each day. But if you look at who are the new stocks where the cars indicator is turning on, and you kind of start to kind of filter through, is there a common theme coming through these stocks? Are we seeing, if we're comparing stocks versus the S&P, are we seeing a plethora of semiconductors coming up? Are we seeing a bunch of maybe stodgier health names that are kind of coming up? Maybe that's a push to safety. So it helps to kind of automatically bring to your attention where the money's flowing right now on a relative basis, which I find super helpful.
Yeah, 100%. And I'm just curious, are you usually looking at a specific index to scan in, or do you just kind of trade anything, like small caps, mid caps, large caps? Is there any specific, size of stock you focus on, or index to scan in, or it's really just anything goes?
So my personal preference is just, I used to trade everything, but what I focus on now is really 5 billion and up in terms of market cap.
Okay. Yeah, that's a good level, 5 billion and up. So if I basically actually have a scan built right here for the S&P 500 index, and what it's showing is basically the car's signal has to be active now, and then one candle ago has to be not active. So basically stuff emerging. And I also put in this parameter that says all the falling happened within 3 candles. So basically it could have emerged anytime within the last 3 days. And this is what I have that popped up on the scan. So again, Amazon popped up on there. We got Amgen. One thing I did notice is we got C on there. We got CBOE, CME. A lot of these financial stocks are showing up right now. Goldman Sachs. So I'm curious, when you're going through this, if you see a lot of one sector showing up, what is your kind of next step after that? Are you just looking at the charts, looking at fundamentals?
So I kind of run usually a 3-way process. And also, you'll also notice CrowdStrike is there, Palo Alto is there. So also you'll notice a bunch of the cybersecurity stocks came up too all of a sudden. And so, and again, what's nice is you're comparing all these stocks, which are different volatilities, but they all get caught. So the next step I'll do is I'll look at the individual stocks, the charts of the stocks. I'll look at their fundamentals. And then once I kind of get an idea of which 2 or 3 are my favorite, then I'll actually run cars, but I'll look at them comparative between each other. So for example, what's stronger, JP Morgan or Goldman? What's stronger? Is it Citi or JP Morgan? And so just trying to make the least amount of decisions fall on my kind of non-objective, my gut feeling. I want to minimize that as much as possible. I want to be able to we have thousands of stocks. Matt, here are 5 stocks you need to choose from now. The decision you have to make, because you were able to say no to so much, is it makes things a lot easier. I had a friend, he worked in venture capital, and it's just, we're both in business, we're both looking for investing ideas, just very different. The problem with people in the market, myself included, is that we love what we do, and everything looks like an opportunity every day. We're not married to anything, so that's a pro, because hey, if I don't like it, I can get out. But you end up having over trading. Typically, he's like, man, my day is saying no to almost everything that comes to my desk. I'm basically marrying whatever I say yes to. So I at one point, there's all these kind of nuggets that have hit me over the years. And so at one point I kind of said to myself, okay, well, Matt, every year I try and focus on specific ways to improve my process. And one year was kind of okay, well, how do I just, never mind finding the best stock, how do I take out all of the no's as easily as possible? So at least I'm down to a better quality, smaller group to start making those decisions from on what to buy or sell. So that's a big part of what the screens, you can start seeing oh, is there stuff flowing into this group, that sector, who's the leader? And you can very quickly start saying no to just the majority of stocks, which is nice.
No, that makes a lot of sense. Instead of trying to find the winners, filter out the stuff that doesn't look good, and then you're just left with the good stuff. So yeah, love that methodology a lot. So I guess if we were just kind of pulling up, these scan results right here, and you wanted to go ahead and compare something like, I think you mentioned
Mhm.
JP Morgan to Goldman Sachs, what you would probably do, correct me if I'm wrong, is pull up JPM here and then go to the indicator settings. And then you can would you prefer to compare it to like the S&P 500, the SPY, something like XLF, which is the financials ETF, or do you go straight and just compare it to Goldman Sachs, the other, kind of leading stock that you're deciding against?
So my default's always the S&P, even though like
Okay.
my personal benchmark is more tied to the Nasdaq. Like that's what I like to follow
Okay.
more. I found for relative strength work, it's like the
Yeah.
S&P is still the big daddy. Like that's what people typically benchmark themselves to. So that I found that's just through my studies has been the best for getting a clear signal. So I always first, and I have noticed this too, because again, because I trade the golds for so long, I noticed like the ideal scenario is both when, let's say, the gold stocks were outperforming gold, but also outperforming the S&P 500. Like you want to have as much flow into your stock as possible. So if you're just outperforming your benchmark, it's good. I mean, that means like, you're better than your peers, but
Yes.
you also want to be getting money at large. Like you want to be a winner in the market as a whole. So I always will look at it versus the S&P 500. And then after I'll start to kind of do process of elimination between each other and versus the ETF if possible.
Yeah. No, that makes a lot of sense. And real quick, just for everybody out there in the audience that may be interested in, trying this indicator out, now is a great time to do it. If I pull up the indicator page, we are having a sale. Well, one, you can get a 5-day trial for free and try this, CARS indicator out for free for 5 days. And our platform, TrendSpider, is on sale as well until market close, or just for the next 45 minutes. You can get a trial of the platform for just $9 and try out this indicator as well. So if you guys wanted to, there is a link down in the description of this YouTube video that pulls you to this page, and you can, try out this indicator for $5 and the platform TrendSpider for $9. So you can get it all. Follow us along for just $9 today. Just wanted to put that out there for anybody that might be interested. And then once you actually go ahead and add it to your TrendSpider platform, you can just go up to our indicators tab, type in CARS, and there will be only one. We have the team accounts, we have a few, but you just click it right here, and then it'll just add right over there to your chart. And you can, select which symbol you want to compare stocks to. And we have a couple different boxes here. Maybe we can just quickly describe the differences here. The background and the boxes are mostly the same. But if you uncheck the background, it'll just only cover the price action of where, the signal was trading within the price action. So some people might prefer that. Or if you like, just having the background like that, it covers the whole chart. So just a quick, tutorial of how to use the indicator. It is pretty simple to use, which is really nice. It's always great to see a simple but effective indicator. One scan parameter for the market scanner and strategy tester. So very easy to use. So yeah.
Yeah, and it's just, sometimes like when I started off, like I was charts obsessed and every indicator possible. I know most are like, initially it's like, how do I find the right entry point, the right sell point?
Yeah.
But I found like, the more you trade, the more you want to simplify your process to make it as easy as possible to repeat your successes. If it's very
Yeah.
complex, it's hard to go back and review like what part of the process really led to my success or my failure. I think this is just a business of like incrementally getting better and better over time. And so
100%.
for me, like a tool like this, and I mean, whether it's this tool or another, well, this is my preferred because I built it for a specific purpose, but
Right.
just like having something that where when I bring up the chart immediately, is this a leading stock? And in a year like this, where there's so much news, if you go back to like from the April bottom, if you think of like how many how many things there were to worry about all year since the April bottom, it's been like
Yeah.
a never-ending series. It was tariffs, then it was now there's the government shutdown, then after it was an AI bubble, and then after it was DeepSeek, that was before, and then the Chinese trade war, and
Yeah.
it's like a never ending series of problems. So if you can block out all of that noise and just be like, okay, markets are trending higher. Where are my leading stocks? Who's outperforming their benchmark? Who's outperforming their peers? Who's outperforming, and on a relative basis? And what's super helpful too is because like I speak with so many clients, so many friends who run different types of strategies and different things. Like a good friend of mine runs like a massive FX, like he for a major bank, and like
Yeah.
by default, I like to look for growth names. So they're naturally volatile. They'll naturally break out to
Right.
new highs first. But a lot of people say like, hey, look, like I want really conservative stocks. I want to be in the market, but I want conservative. So you can bring up a Verizon, you can bring
Yeah.
up whatever it is, a Pfizer, and be like, okay, well, I want something that's a dividend payer, but I only want to own it when it's actually holding in well compared to the market. And you can see like Pfizer for the longest time, like why stick around for
Yeah.
safe stock if it's not so safe, like
Exactly. Yeah. Yeah, even
yeah.
these safe stocks that you can see, Pfizer is a great example. I mean, this thing's down, over 50% over the last however long, like couple of years since like 2022, as it's really never recovered. And
Mhm.
like you said, what people call, like a value stock, dividend payer, like quote unquote safe, like it's not always the case. And it is very nice that this CARS indicator does adjust for volatility, because if it didn't, it would be comparing like apples to oranges. Like you can't really compare the volatility of something as slow as Pfizer to something as crazy as like IONQ, like quantum names,
Exactly.
or
Exactly.
Palantir. So yeah, it
And
makes a
if you
lot of
bring up,
sense.
for example, a TAC, I don't know if you know that symbol. That's TransAlta. Like this is like
Oh
old
yeah.
stodgy Canadian pipeline stock, like not a whole lot, but because there's a sudden demand for energy and all, like look at how this went from being like a, I don't want to say useless, but like, just dividend payer, like underperformer, to suddenly there's like a new demand catalyst you wouldn't have otherwise realized. And if you only would have focused on the stock when it was doing better than its benchmark, you would have
Yeah.
gotten the dividend and not had the heartache of the big kind of like losses over different periods. So it's not perfect, but it's at least, if as a starting point you're starting with a crop of winners, to me, is just you're just increasing your odds. So that's been such an important focus for me.
Yeah, no, 100%. So I'm curious to then, because I know it's kind of like an easy way to see, like what is outperforming another stock, but you don't really use it as like an entry signal, right? Or is
No, I don't. So for me,
okay.
that's, and I know most indicators people like that like aspect of it, but for me, that there's so many great tools that you can apply. Like if it's a stock under demand, and you like an MACD, or you like just a
Yeah.
moving average crossover, you want to
Mhm.
trail it with a
Yep.
21 EMA. Like there's so many nice ways, and so what's great about that is because everyone usually has their process of how they like to buy and sell. Typically, some people's like, hey, if, as long as the low is above the 21 EMA, I like the stock, or if the
Right.
8 is above the 21, I like the stock. But like, like why not tie together that like trending process with a stock that's already naturally under accumulation? To me, it's like it's a no-brainer. You're just increasing your odds by taking out
Exactly.
all the weak names.
So, yeah.
Yeah.
I'm curious then, like, do you have any specific signal that you like to trade? Like, is it a moving average or
So my favorite averages are the 8 exponential and the 21 exponential. Like those are my go-to.
okay.
I don't treat them as like a blanket like crossover type system, but those
Mhm.
kind of guide a lot of like my shorter term entries, and I like to kind of pivot around those averages to find. And I'll use a lot of price action trend lines or some of my like
Very
preferred
nice. Very nice.
trade. Yeah.
Yeah, just something as simple as, like a moving average crossover combined with something as powerful as, a relative strength tool. Like, as you said, pretty simple, but sometimes that's really all you need to catch a nice trend. Like if you pull up again, like Palantir, like even this TAC chart is beautiful. Like
Mhm.
if you only focused on it, like you said, there is one point, like this 821 crossed right as it went into, its relative strength territory. And then as soon as it's, broke below these EMAs and came down, you were out probably, and you just capture the trend and move on to the next, right? That's pretty
Yeah.
much,
And I find there's safety in that too, because again, part of it as well is, um, you want to avoid like the really nasty stuff. And if the stock
Mhm.
is outperforming its benchmark, it's outperforming the S&P 500, like you're less likely to be in a stock that suddenly has like a downward revision or downward guidance, because
Mhm.
there's been like net flow into the stock for weeks or months. Like this indicator is really looks at like the past 1 to 6 months. Like that's the time
Okay.
frame it's focusing on. And so if you're
Got
seeing
it.
like positive flow over that period of time, it's unlikely unless there's like an earnings reaction or something or some shock thing. But generally, you're under positive accumulation. Like,
Yeah. Yeah.
and
Yeah.
it's helpful. Yeah.
Definitely. And so we've been I know you probably primarily use like the daily chart time frame,
Mhm.
but I do know that the indicator does work across all time frames, right? So I'm
Mhm.
curious as to if you have any thoughts on using this indicator for, the shorter time frames, compared to daily? Like, would you use like a daily relative strength, um, reading to use as a day trade, or would you like prefer to look at it on something like the 15-minute chart if you're like,
So the only thing with the 15-minute, it's like the time period has to be long enough so it's not influenced by the intraday rhythm. Like again, I was a
yeah,
market maker for a long time, so it's like
yeah,
the open to the close period is important. It's like this is something I would look at maybe with like an hourly chart. So like
okay,
at least you're capturing like a fair number, a fair period of time
yeah,
for like analysis if it's under accumulation or not. Like let's say a 1-minute chart, like the opening has its own specific pattern to it. Same with the close, which wouldn't make it as relevant. But as soon as you start to kind of incorporate like at least multiple days into the analysis, I find it starts to become helpful. And part of that too was, like the genesis of this thing was I had a good friend of mine where we started to talk about this. He also used to make markets in gold, my good friend Harry. And like we would just like naturally like look at like what's the volatility of, let's say, Kinross, KGC. What's the beta versus gold? Let's say it's 3. So each day we start to kind of mark down like, oh, KGC it went up more than it should have today, or it went down more. So we used to keep like kind of like a rolling tally, and it would be amazing. Like before a stock would explode, there was always that period of time where like gold would be weak for 4, 5, 6 days, and the stock wouldn't budge. And then the
right.
second gold would turn up, you would kind of explode higher. So it does apply on the shorter term time frames, but I like to look at it over multiple days to kind of find out when somebody's like accumulating.
Yeah, no, it makes
And also,
sense.
I mean, KGC is a great example, like versus the S&P. Like how often does a gold stock come under accumulation like this? And look how this flagged it perfectly, even though it's a gold stock.
Yeah, no, that is amazing. That is definitely amazing there. I mean,
Yeah.
pretty classic setup right here on really just gold in general. Like, I feel like just the regular gold chart, if you pull up like GLD, like even on like the monthly, was just like a beautiful, beautiful technical setup here.
Mhm.
Like essentially like that perfect like cup and handle setup right here, breakout, and it's just absolutely flown ever since. And if you're looking at stocks like CDE or KGC, like he could have
Mm.
done really, really well capturing that trend. Done higher performance than just holding like gold itself.
And what's interesting, again, because it happened that I started doing this, and like this is not like I want to say this in a nicest way possible, but like it's not a great business model where you have like a finite resource. You dig it up out of the ground. Once you sell it,
Mhm.
you're out. And things can go
Yeah,
wrong. Your mine can flood. The government can take back the mine. Like there's a lot of negatives that
yeah,
can happen in this. And so you only really want to be there at the right time, because most of them have like a downward bias. Like most of them like just are like depleting assets, and then they have to spend money on finding new gold if they find new gold.
yeah,
So this is like a particular industry where you really want to be there only at the right times. And if you don't have that as part of your filter, you say like, I want to have so much in gold. Like, yeah, but you're probably gonna have a lot of heartache for most of the time.
yeah,
And then there's like the few good times where there's like great outperformance, and that tends to always be the case with this industry. So super
yeah.
flexible.
Yeah, no, for sure. And if you go back to Palantir, I don't think we touched on Palantir a little bit here, but I mean, the fact that if you go like on like even the weekly chart over here, like it really kept like Palantir did pretty well when it IPO'd, and then ever since like 2021 to 2022 sort of bear market, it really did not really go anywhere for a while, and it was pretty brutal to hold. But as you can see with the cars indicator here on like the weekly time frame, you really weren't in there really until any point where it was actually moving up. Like
Mhm.
first started there in like 2023. There's a couple of points here, but it kind of got you and then got you out pretty quick. Probably pretty small loss if anything. But then it really started kicking in here since like 2024, and when it comes to trend following, like catching those big trends is like all that matters. Like minimizing your losses and catching these big trends is all that matters. And really amazing how it just automatically right here at the basically the bottom call down Palantir, and even during this downturn, like you're saying in March and April, kept you in because it was outperforming the overall market. So
To me, the ideal, like the golden setup, is if cars stays on, like just for those who don't know cars, it means Caruso Adaptive Relative Strength.
mhm.
Not to say the whole name every time, but
Yeah,
if cars stays on when the market corrects, like I mean, there's always nothing set in stone. I wish it was, but like it's pretty game on for that stock. If it's a growth stock,
yeah,
because you would expect if it's, let's say, Campbell's or PepsiCo, something that does well and in a recession, then it's like, okay, it's normal for them to outperform in a recession. But if
Yeah.
there's like real market concerns or a deep market drop and a growth stock like doesn't kind of break lower, something's really changed within that. Like there's a sudden really shift in demand. The moment that market turns up, you're going to really start to rip. I think another interesting one, if you look at STX, which is
Yeah.
seating, which had been kind of like a stodgy, like a hard drive maker for many years, like and had been out of favor. Like this year, suddenly, like off the bottom, you came back and you showed like
Wow.
tremendous strength. And for me, the trade I put on here was just in August when there was a lot of market weakness. So I missed this one right off the bottom. I had Palantir, had a
Yeah.
GE and others,
Oh,
but
okay. Yeah.
when I was looking at the August period and we had some market weakness, specifically in growth names, this didn't budge. The second the market just hinted at going back higher, this thing went vertical with the whole group.
Yeah.
So
No,
that
it's
was
a
a
beautiful
good
setup.
example.
Yeah.
Mm-hmm.
So when you're looking for entries, I noticed like there is this, like you said, in August, there is this period of consolidation. Is that something that you're looking at all? Like, are you looking, because like, the William O'Neill, like How to Make Money in Stocks kind of methodology, they talk about like the breakout trades, cup with handle. I'm curious if you use any of that when you're looking for your entries, or if you're just looking at other things.
So I'm not a big like breakout buyer, like
Yeah.
which I think people who hear what I talk about would expect that, because I know like Bill did a lot of that. But I feel like markets have changed a lot since the book was written, and every algo in the world can know where a high is going to be and where everyone's going to suddenly rush into it. So
Right.
there are like rare occasions where I'll buy it on strength if it's coming out of a deep market correction and it's the first one to kind of move higher. But like my preference is if we get like a slight pullback to key averages to an 8 EMA, or if we have like a shorter term candle pattern that I'll use in strength. So I have like a whole list of things that I like to look at. But like STX, you can see when it broke out of that pattern in like late August, we had an initial like kind of kickback to the green average.
Yeah.
Like that's my preferred kind of
Okay.
type of entry into these things. Like it's a little lower chance of failure because the breakouts could just be so nasty.
Yeah.
If you do, I mean, like on zoomed out, you don't see it so much. But if you look at like that July August period, it's like a slow like sloping of taking out like each prior high and failing, taking out each prior high and failing. So like zoomed out, you don't see the pain. But if you're trying to buy breakouts, like look at how like every single time you're taking out a prior high, rolling over, taking out a high,
Yeah.
like that gets really expensive.
Yeah.
I know it's easy to teach. Like you can find like the cherry picked examples. Like look, buy the breakout, it's easy and it goes up. But the reality is, you'll have like a tremendously high failure rate, and that's a stock that went vertical. So imagine a stock that doesn't have that kind of buying power behind it. Good luck buying breakouts.
Yeah, no, 100%, 100%. It could, yeah. And you see like when the breakout happens right here, it just instantly comes back down. And you're right. Like when it comes back down is really probably the best time to buy in these cases, at least in this case specifically, depending on, I guess, where you're putting your stop loss too. Like, I don't know how your risk, like how do you, like use risk management? Are you using like pretty tight stop losses? Are you looking at levels on the chart, EMAs, or like what is your thoughts into managing risk after you're getting into some like a play like this?
Yeah, so my stops usually like the 3 to 5% range is what I prefer to do. So if I'm buying it right on an average and I expect that average to hold, like I'll give it max 5% below the average. But
Got it.
like let's say we broke out of a recent base and I'm buying a retest of that base.
Yep.
Like I'll always look at the candle that broke out. If it breaks the low of that candle, I'll use that as a stop as well. So it depends like where I'm entering things and how it's happening. So like I'll look at max, like I rarely let anything go past 5%. And if I can find like a logical place on the chart to justify a lower stop, I'll use the lower stop.
Okay. So that's interesting. So you said if it breaks below the breakout candle, sometimes you use that as a stop. And that's pretty cool. So like
it's because like, so I always try to think of charts as like, what are they actually telling me? Like, I know it's breaking out, but if it's breaking out, like I go back to the days where I was making markets. It's like, to me, a breakout is, let's say in this example here, there's a seller at, 150. He has, $1 million for sale and he's there for 1 day, 2 days, 5 days. Like the reason volume swells, or at least more in the old days before there was like HFTs and algos, is that someone like literally picked up the phone and was like, look, whatever that guy has, if he has 5 million, like I'll take it and post 2 million more. And you'll see like this surge of volume and that'll like break it out and the seller is absorbed. So if that like my mind is always like, why did that breakout happen? Why did that surge happen? If it means the seller is gone, well, then you shouldn't go below the low of the breakout bar. Like there's no breakout anymore. Like, I mean, it's failed. The seller returned and the buyers have been overturned. So why take an 8% loss when once it falls 2.5%, I know my reason for being there is gone. That's the way I approach it.
Makes sense. Makes sense. So yeah, pretty classic kind of trend following stuff is this setting your stop losses, really respecting them, keeping your losses, as low as possible, and just capitalizing um, into these uptrends. And I'm just
Mhm.
curious into that part. I'm curious how your methodology on taking profit works. Are you like trail stopping, or are you selling into strength? Like, which do you prefer in that sense?
So I bucket my stocks into two categories. So like there's a lot that goes into figuring out which stocks to buy, and part of that is fundamentals and the theme and relative strength and the rest. But I have a respect as well for like what the market tells me after I buy the stock. So again, a lot of this goes back to William O'Neill, and I have kind of my own spin on things. But essentially, as I'm putting on risk and putting on new positions, the pace and the speed of how they break away determines if I think it's a stock that is a leader, like something that's a quality stock that's going to lead the cycle, like STX, for example. A move like that, it's like you want to give that stock time to breathe. If you're that
Yep.
powerful, if you're outperforming the market, your benchmark, and even the breakout from the base is that strong, there's something special going on. You want to give it time. If it's a
Yep.
stock I purchase and after maybe a few days, I'm up 7 or 8%. After a couple of weeks, then I'll just take the profit a lot quicker.
Okay. Yeah. So sometimes you're just in there for a specific time period.
Yeah, so it's kind of a combination of price and time. Like I have a lot of like time rules. Like if
That's
the
cool.
stock is holding, yeah, acting properly. Like my aim is to hold that stock for 3 months plus, unless it does something like
Right.
terrible on an earnings report or something. And
Yeah.
so, like, if you look at my trades and you kind of break them down, like the average holding period is either probably a week or 5 months. So it's kind of like
Yeah.
there's like two buckets of trades depending on how they act.
Yeah. That makes sense. Get out of the losers quickly if it
Yeah.
fails, and then let those winners ride. I love it.
Mhm.
Absolutely
Mhm.
love that. Um, yeah, we still got a little bit of time till Palantir earnings comes in. I'm curious, since we're looking at Palantir earnings today, if you have any thoughts on this company, maybe fundamentally, are you a Palantir bull? You think it's overvalued? I know it's kind of like not a controversial stock, but obviously the chart has been telling the truth on this one ever since compared to
Yeah.
fundamentals. So just curious on your overall thoughts of it.
So I had two trades on this one recent years. Like, we bought this like last fall. I think it was 27, 28 when I started to buy it. You can see where
Okay.
like the car signal came on, then it had a little bit
Yeah.
of a backslide in that area there. So that we actually sold into strength a little bit early. I think it was like $90 or somewhat like in that area. And then it had that last
Right
hurrah.
around here, maybe.
And then
Yeah.
again, this coming off of the market bottom, we kind of repivoted back in there around, I think, $90 or something. And we sold this as it kind of went climactic again in the short term around 185 or 182 in that area
Nice.
there. Yeah. So I don't have a position in it now. But I
Okay.
think it's tremendously important as a bellwether for the space. Like again, speaking of cars and all the rest, like my whole focus this year has been stocks related to AI in some
Okay.
capacity. If you
Yeah.
go back to every cycle, every market cycle, it's always the key theme of that cycle is where all the gains are going to be had. And so
Yeah.
Palantir, I think, is one of the key leaders of this cycle. To be honest, I'm not a valuation guy. Like obviously I'm trading Palantir, but when you're
Yeah.
trading at like 100+ times sales, you can keep going higher, but you really can't disappoint anybody anywhere because you're really priced for like absolute perfection. So it's going to
Exactly.
be interesting to see how they come out after hours and what the reception is to their earnings. I think it's going to have a good. It's going to be important to see what the risk appetite is still for everyone looking at the space.
Yeah. No, 100%. I mean, we're sitting here basically we're at all-time highs, hitting another all-time high here on the stock today. Actually, pretty decent setup here on the daily chart. Um, you know, kind of based up right here in October, September for a while. At the recent resistance, and it recently broke out, and ever since it's really been going up.
Mm-hmm.
So yeah, it should be very, very fun to watch. You don't have a position in it, so no worries there. We also have another interesting one that's actually reporting earnings, is him stock.
Mm-hmm.
Another pretty high flying stock. Did you ever trade this one?
I did. I forget, no, not much. This is like a little bit like you start with time. Eventually, you know what your preferred tolerance is. Like trading is a little bit. So this is a little bit wilder than I typically
It
prefer
is.
them to be. But
Yeah.
I think it was on that last leg up there where it went parabolic. I forget now. I'm using. Can you put the charts in logarithmic scale if you don't mind,
Yeah.
just for the
Yeah. For
weeklies?
sure. For sure.
Yeah. So that last, I think it was like June of 20. Sorry, Jan of 25, before the tariffs
This
came
one
into
right here,
place. Yeah, that
probably.
that
Yeah,
leg there, I had a small position. You can see how it built a nice basing structure. Cars came in when it was like on the right side of the base,
right
and that's
here.
why it
Yep.
took up. And I don't think I played it perfectly this one because it's a little more volatile than I'm used to. But I did trade in that area, and then since then I haven't really given its volatility, I didn't really go back to play too much.
Yeah.
Yeah.
No. Yeah. Pretty crazy one there as well. Should be some fun earnings to watch here after hours. Keep
Mhm.
getting these drawings from someone else on the account, but both of them, I mean, explosive revenue growth. I know you don't really consider yourself, a fundamental analyst, but just curious if you if you look at it at all, like if you do, whether it's revenue growth, or you like looking at valuation ratios, EPS growth. I know you mentioned EPS earlier, so curious if you have any take on fundamentals
Yeah,
when you're
for me,
choosing
it's
stocks.
a really important part of my process.
Yeah,
Again, Palantir is the perfect example. I mean, does valuation count in the market? I think as long as people are confident of the future, it'll keep
right.
going higher. It's whenever that confidence is
Yeah,
broken. But for me, the fundamentals are important because, I want, to me, that's the track record that the company can execute, that management knows what they're doing. And I like to trade a little more concentrated. So before I'm going to put like a concentrated portion of my account in something, I want to know that it's not just a hope and a prayer. I remember I was trading, there was a stock called Sino Forest years ago, and it was like a Chinese based. This is when like a lot of the Chinese ADRs started and all that. And I don't know, had like
hmm
a forest in China. And at some point, it was like $18. It was halted and delisted because basically like, none of that existed. It was all like a fraud. So I didn't have a position, but I know some guys that got really blown out of that because they're just
yeah,
trading it and it was like halted and gone. And like, you're not expecting usually like an $18 stock to be delisted. And so like, these like lessons along the way, like kind of like shock you into like, certain things. And it's a lesson you don't want to, it's a mistake you don't want to make yourself if possible. So for me, seeing that not only like earnings or sales, but like the positive growth trend is showing that that business is accelerating. Like, will it continue? I don't know. But, if Michael Jordan won two championships, he's probably more likely to win four than the guy who never started last season. You know what I mean? It's like you're just
yeah,
looking at who's winning. And then at a certain point, you have to understand when, maybe like if the price action changes. But for me, that's like the important track record to show that there's actually something true behind the hype. And nowadays, more than ever with X and all this stuff, there's so much hype, and this is the next big thing. And it's,
yep,
you know, uh, and the charts are very important, but even charts, anything can be manipulated somewhat, So to
yeah,
me, it's like, again, it's all about saying no. I have like
mhm,
10,000 stocks I can choose from. How do I pick 5 to 10 that I really want to get a focused position in?
definitely,
Why not? I mean, look at some of the tremendous runs on these AI stocks, or even something like a Palantir, even though the valuation's high. I mean, the tremendous technologies.
yeah,
Why pick a company where they have no revenue, or it's a promise, or they're
right,
losing a tremendous amount of money, or they have revenue but the revenue is slowing, but they plan to turn it around? Like, why not just stay focused on the ones that can actually pull it off? So that's the way I approach it. So that's why Palantir has been on my radar, even though the
yeah,
valuation's high. At least they've been able to execute and meet those expectations.
definitely,
At a certain point, they're going to have to justify the valuation, but we'll get to
of
those.
course. Of course. So in that case, I assume you maybe haven't traded something like OKLO that has pretty much no revenue, it has great momentum. Actually, looks like the cars indicator picked this one up pretty nicely, but again, no
Mhm.
revenue, pretty speculative. So is this something, a stock like this, you might have avoided?
So I avoided this. My go-to was GEV and
Oh,
CCJ
nice.
are
Yeah,
the two.
GEV.
Like, so again, like they're focused on the same theme, right? I mean, it's
Right.
about power generation, all the rest.
Yep.
And I like to trade console. I had like a really sizably concentrated position in GEV, which to make
Nice.
that return on a General Electric company is amazing, like risk adjusted for what you're taking on. And so that's the way actually, if you bring up CCJ, like those are the same
hmm
tailwinds that are driving Oklo. Like, I mean, I put out a YouTube video, I don't know, a year and a half ago about like this whole like nuclear renaissance and why it was needed for AI, and who are the players. And so the writing's on the wall. And then like, again, that kind of comes down to, which flavor do you want to pick? Like, what's the right amount of risk or volatility for you? Like, for me, I want to go to bed at night knowing the company actually has a product,
Right.
and I'd rather have twice the position size, but feel better about the company than half the position size and be worried that, I get a report that, they're fudging the numbers kind of thing or something. So
Yeah.
like that's my approach. But I mean, like, look, like I hate to, like, sometimes people will be very kind of like snobby about it. Like I'll never talk down anyone. Like when I was a market maker, I just started and I was like, 22, 23. I
Mhm.
remember at one point I was trading a stock for like 2 months and I thought it was a gold stock and it was an oil stock, because I was just trading the chart and I was trading the
Yeah.
action. But like you can make money doing it. It's just at a
Yeah.
certain point, like you should have your personal preferences. So like my preference is, I'd like to have like certain qualities before I trade a stock.
No, makes total sense. I mean, yeah, you might as well, like you said, you might as well. I mean, there's going to be stocks with momentum and fundamentals. Might as well pick the ones that are, growing revenue,
Right.
decent EPS, already doing something as opposed to something that's basically completely speculative. So, yeah,
Mhm.
makes a lot of sense. Makes a lot of sense. Um, so, yeah, let me see. We got 15 minutes until the market closes for Palantir earnings. Let's see. Yeah, we've talked about a
Actually,
lot.
just
So far.
no, I
Okay.
was gonna say, just to kind of talk on this point again, just like as we're speaking about, if you bring up CCJ a second, real quick,
Yeah.
like this has still been making pretty much new highs. You can see in
Hmm.
recent months, it's still been trending high. If you bring up GEV again, just for comparison, because they're both like kind of the two stocks I was focusing on for power generation, you can see how like cars, as strong as it was, and even though as it was kind of holding sideways, how the car signal turned off. This is why like I
Good.
kind of like pivoted out of this like a few weeks ago. We had a good run and all the rest, and I saw that, and there's been so many nice acting stocks. I said, I'm going to put my capital to better use elsewhere. That's a
Yeah.
good example of, it's not an on-off buy sell signal, but it helps you to like kind of make a more data-driven decision as to where you're going to allocate your money, even between similar types of stocks. And that's a good example of where if like, hey, I still want exposure to the power theme, well, like I'd rather stay in CCJ and like pivot out of GEV, which has kind of started to lag since then. So
Yeah,
good
it makes
example.
sense. I didn't see ever since it kind of turned off here. It kind of turned back on for a little bit, but mostly it's kept you out and hasn't
Right.
really gone anywhere since the signal turned off. So pull back up like CCJ. Again, it's gapping up on big volume yet again while the
Right.
signal stays on. So yeah, very good stuff. Very good stuff. Useful indicator. Kind of curious too, then how many positions do you normally have at a time? Are you type to have, like just a couple positions or, like a whole portfolio, like 10, 20, 30?
So at the start of a new market uptrend, if I'm like pivoting from like pretty much a cash position, like I'll usually
Mhm.
build up to maybe like 10, 12 positions. And then just
Okay.
naturally, like as some stocks, like I said, if they don't perform strong enough or they stop me out, like I'll just slowly kind of reposition, keep allocating money to the winners at like higher price points where it's
Yeah.
possible. And I'll usually filter it down to usually like 4 to 6 is like, okay, I'm positioned, like these are the stocks. And I'll pivot around those if I have to, but that's usually where I like to get down to in a
Okay.
market trend.
Yeah. Makes sense. So, relatively concentrated. Are you like sizing your positions the same into each one, or do you put more emphasis on like ones that you think will do better?
So I usually size them whenever you think one's going to do better, that's going to do the worst, and the one that you think is good is
Right.
not
Yeah.
your best one. It's always the kind of the way it is. So like,
Yeah.
and also that's where like the biggest mistakes can come from. If you're going to make a big mistake, it's going to be in your risk management. No one ever went broke buying one stock that went up less than the other. It's when you got off. It was when you made a really big mistake with risk management. So
Yeah.
for me, knowing that like kind of like my position sizing is consistent, like my rules about how close I can add or how aggressive I can get with the stock or a sector, knowing those are black and white. It's not my emotional bias. It's not like, oh, I think this is a good one or this was going to be right. I'm going to go twice as big here.
Yeah.
Like that is protecting me from me. Like every cycle, I know even if I get a stock and it acts right, it's naturally going to become a bigger holding. And if I get a stock and I'm wrong, it won't be any bigger than any of my other positions when I put them on. So for me, that's kind of like a rock solid part of my process.
Yeah. Okay, cool. Yeah, that makes a lot of sense. Yeah, pretty excited here for Palantir earnings. Let's see. Uh, Last quarter they did their first $1 billion quarter, so it should be very interesting to see what happens this quarter. I mean, if you like, as to your point, you're looking for revenue, looking for growth and EPS and revenue. I mean, Palantir has been a poster child of a growth stock right here. I mean,
Right.
practically year over year. The way this kind of chart works over here is the green bars means they're growing year over year, and they basically haven't missed a single quarter ever since like 2022. Basically, same on the EPS front here. And, there's a famous quote is that, I forget who it's from. I think it might have been Peter Lynch or somebody said like, there's basically 100% correlation with the stock's like earnings and its stock price. And quite literally, you see the stock price here, the EPS is just flying up and to the right with
Mhm.
Palantir here. Um, so Yeah, should be very fun to watch this going into
Ult-
close here.
Ultimately, the price action earnings always come into line. Like sometimes the problem is there's delays. If you get ahead of yourself,
Oh
that's
yeah,
the key difference. But like he's right, Peter Lind. Ultimately, if like they're gonna get together. And it's just, like Palantir again is probably like even more. I mean, I think Nvidia obviously is the most important stock in terms of just overall like size and impact on the industry and market in general at this point. But Palantir, I mean, it's got almost a $500 billion market cap, and like you said,
yeah, it's crazy.
a billion in revenue. Like what did they do last year? Let me just check. So they're
Last
expected
quarter
to
did
do,
good.
yes, yeah. So this year they're expected to make a little over 4 billion, and
Yeah,
their market cap's 500 billion on 4 billion. So like they really can't get anything wrong. So
yeah,
it's probably the best bellwether to like measure market sentiment for the space, I think. And we'll
yeah,
see.
for sure. Yeah, it'll be great to see how it reacts and see how the overall market reacts. We had like huge earnings last week from Amazon, Apple, Google, like all the Mag 7. Obviously Amazon flew higher. We got pretty much all of them beat earnings on
Mhm.
like numbers wise, but a couple of them like Meta absolutely tanked. I think was it Meta? Apple did pretty good, but it's just interesting to see
Mhm.
how these are going to react to earnings. Because even like as you can see with Meta, like yeah, they had that weird kind of EPS thing with like the tax bill, but they really kind of beat earnings on both ends, and they came down quite a bit. So like even if Palantir does report really solid numbers here, could still hit a
Mhm.
downward move. So and that will highly, if like you said, affect the market sentiment going forward. So me being a permable, I'm hoping it keeps going higher. Love to see stocks going up. So
Yeah. Now today is interesting too because like I've been kind of like one of my bigger positions of late has been AMD and NBIS. Both have been doing really
okay,
well, and all the concerns of like the Mag sevens and all have been like capex spending. They're spending too much. Like my view is always
right,
like, yeah, but these companies are the ones that are getting the capex, so for them it's a good thing. But
that's true.
today's interesting because I've been seeing some market weakness under the hood lately. And today, IREN and CIFR, especially IRE, they got some big deals and they gapped up, but they've like a
Hmm.
lot of the group has seen selling pressure after the opening gap up. So like my personal view is I think in the short term, like government shutdown and stuff is starting to kind of weigh on stocks a bit. It's probably like draining liquidity a bit in the economy. So that eventually will pull on stocks. So we're going to see what happens here. I've been hedging a little bit. They report next week, NBIS. And so I've been doing some hedging. I'm starting to try and do some hedging for that earnings report.
Nice.
And so
Yeah.
I think Palantir's going to be really important tonight to see what comes up.
No, definitely. Yeah. On NBS here, got a couple gaps up, but yeah, we're getting pretty close here. It's 12:53 Pacific time for me. It's what 3:53. So we got bell in 7 minutes, and then Palantir's going to report like 5 minutes after the bell.
Mhm.
So we should definitely get some movement here going into the after hours session. Just 5 minutes after, which is nice. We'll take a look at what happens and we'll go from there. But if you guys are out there, I see the chat flowing. If you guys have any questions while we have Matt on, feel free to ask him. Got an investing legend on, not always the case. So definitely a great time if you guys have any questions, especially about like relative strength, the CARS indicator. Definitely drop them down below because got a great resource right here. Earnings call for Palantir, Tion. Actually don't know when the earnings call is. Probably an hour after close, but the earnings drop will be 5 minutes after close. So let's see. Is anyone questions? Palantir will have to show a minus 50% plus loss on futures revenue earnings as government shutdown. Yeah, and the government shutdown too, which is kind of wild. Like I was live for the FOMC announcement. And it's kind of funny. He was using like Indeed job reports because they didn't even have, the job numbers being released. Kind of
Mhm.
crazy times.
Yeah. No,
But
Secretary of Treasury Bessent, and like he's always obviously his job as part of the administration always spin things as nicely as possible. Like even he's been saying, he thinks part of the economy is in recession and is starting to eat into the muscle of the economy, the government, which it is. Like I said, even if government spending is misspent, long term that's a negative. But if you pull that away in the short term, one person's spending is always one person's income in the short term. So kind of just pulling away spending will always kind of have a negative impact on things. So we're drawing on a month, and government's a big spender. So
Yeah.
it's something that at some point, even if the whole AI thesis remains intact, it's normal to kind of get some market pullback if that's the case.
Yeah, for sure. We had one, I guess, pretty solid question out there. They're just asking, can you summarize the CARS indicator? Like maybe if you just have, just a quick elevator pitch of the indicator itself for maybe people that are just joining. Again, you can use the link in the description below to try this indicator for just $9 today. If you guys want to test it out yourself, click the link below and you can sign up for TrendSpider for just $9 and try it out. But yeah, it is a relative strength indicator. And Matt, I don't know if you have like a quick
I would just say it's purposely built to be simple. It's a way to have on your charts to know immediately if the stock is outperforming the S&P. But if it looks at your stock specifically, looking at its volatility, looking at its relationship to the S&P, it doesn't just show is it going up more. It factors in the character of your stock. So regardless of whether you're trading bonds, crude oil, a tech stock, or a dividend payer, if you want to know how am I doing versus the S&P or whatever the benchmark is, this will tell you that at a glance. So when you're looking at a whole bunch of stocks and you're trying to figure out, well, where do I put my focus? This just is a great starting point. To me, a critical starting point is which stocks do I start to say maybe yes to compared to all the rest. That's how it's the only relative strength tool that I know of that is that adaptive. That's why I call it adaptive relative strength, is because any ticker you put in will naturally adapt to what the benchmark is.
Yeah, makes sense. So basically relative strength and then also volatility built in. So it's pretty universal to track, strength on all stocks. And a great starting point, a great way to filter, maybe a portfolio that you have to find where the market leading stocks are in your portfolio to kind of narrow them down. I think that's one of the big things I kind of learned from you today, Matt, is this, the ability to narrow down a bunch of stocks into a small amount is a very useful thing. Great use case for the market scanner as well.
It's huge, especially, at all times, but like, let's say you're coming out of a market correction and you want to know like who are the leaders, like how else are you going to figure that out? I think it's so important.
Yeah, no, 100%. And it's on here on my chart. I'm just giving our friend Karen here. This is kind of funny. Karen is like our sidekick's personality that kind of yells at you. So I'm asking to give her or just go over the expectations of Palantir earnings and what to watch out for. Should be a funny kind of response. I'll minimize that while it thinks. Let's see if we got any other questions. Yeah, you would definitely consider yourself. Would you say you're a swing trader or a position trader, Matt? Or like
I've done pretty much everything, but I focus on position trading. But I'll use swing. So I use swing trading techniques to build low risk entries to become a position trader. So like my goal is like this year, all my best trades are like Robinhood, GEV, NBIS, AMD, Palantir. Like I've tried many others along the way that were small losses. So when they work, I become a position trader. When it's not working, I'm a swing trader. So I let the market feedback determine which stocks become which.
Yeah, no, that makes total sense. Yeah, we got 2 minutes till market close. So we can pull up like the 5-minute chart here. Let's see what our sidekick has to say. He says, "Oh, wonderful. You're asking about earnings literally hours before or minutes before they're released." All right, let's see. So consensus numbers, EPS 15 cents. Revenue expected is 1.1 billion. I believe last quarter was 1 billion. Let's see here. Here's what you should already know. Yeah, it's obviously been beating EPS and revenue. Yeah, saying what to watch out for. Revenue growth, deceleration, of course. That's what you're saying. They pretty much have to keep beating to justify the valuation. That's pretty important, right? And obviously the high P ratio is what it's competing against with this revenue growth. AI partnership momentum and guidance. I think guidance is a really big thing that I watch out for, going into earnings. Because, I guess the way I think about it is, the markets are forward-looking, stocks are forward-looking. What's kind of already, priced in is the actual numbers, but forward guidance kind of gives investors something to look out for and for the stock to, be surprised or like try to price in as time goes on. But we'll see. We will see. Let's see, what time is it? It's 12:59 or 3:59. So market will close here in just a few minutes. Let's see if there's any other indicators. Yeah, the link to the try cards I posted in the chat, you guys, and it's also in the description. So you guys should be able to see
The
it all
aim is
there.
really to find, like, how do I try and find stocks that are going to trend? It's a good starting point. I think tying it together with, I mean, the way I do is basically tie it together with other trend following tools for entry and exit, but it's just a great starting point to kind of get rid of the noise.
Yeah.
And you know, I think like Palantir, all these are just such great examples. It's just all about market expectations, you know, like
Yeah.
those forward estimates. That's, you know, the meme. I don't know if you've seen on Instagram or whatever. It's like, you know, like Palantir misses, but stocks are playing. They're throwing like
Yeah.
the investor's intelligence book into the garbage can, because that's
Yep.
just a lot of what it is, you know. So
Love those.
yeah,
Exactly. I mean, yeah.
it's estimates, it's expectations, and that's what the market's built on. So
Yeah. No, 100%. Yeah. I love those memes. Or like, you know, when earnings kills it and then it's down 20% after hours.
yeah,
Like, well,
exactly.
you know, what I study all these fundamentals for, you know. So
And that's why a big part of my process is just become like, you know, I've had great earnings reports, but I tend to have bad ones that I'm holding. So I've also like implemented a system myself where I hedge earnings. Like, as part of my process is I want to have enough gains going into earnings that I'm going to either buy some out of the money puts or at the money puts,
okay.
depending on how expensive they are. So I have all the upside if the stock beats and accelerates, and if it misses, well, it's just the cost of doing business kind of thing. So
That's interesting. So you're buying puts to hedge.
yeah.
Do you ever sell calls as well to finance them, or just the puts?
So I don't. Again, and I get it's a great question. It's one I always kind of get, and the whole key
Yeah.
for me is I'm trying to find these stocks that are going to have these big uptrends, and you know,
Right.
the amount of gains in the 3 months between earnings are so huge. Like, I don't want to cap
Yeah.
that off. Like, so
No.
it's
Yeah.
again, part of the car that for me, it's part of the car. If I have a 25% gain and it's going to cost me 10% to hedge, well, okay, worst case I make 15, but I have all the upside if we're going to build momentum and run. So that's
No,
how I
that's interesting. Yeah. I'm curious. Do so you prefer to buy puts to hedge over just, you know, taking some profit or just selling some shares, would you say?
So I'll do that if sometimes like the puts are like incredibly expensive. Like some stock, like let's say
Yeah.
you were doing with Oklo, like the
Especially for
puts are
earnings.
just so
Yeah.
expensive for earnings. Like it almost doesn't even make any sense at all to hedge. So
Mm-hmm.
if again, that's part of why, like, you know, again, you start off from the beginning, which stocks do you want to buy in the first place? That's why I like stocks that are a little steadier. They're easier to hedge, and the rest as well. But if let's say I'm in an Oklo type of stock, and it's up huge and earnings are like a crazy amount, like there I'll prefer to sell a bit of stock, like lower the adjusted cost basis, so I won't take a loss on it in any case, and then after that's
Yeah.
how I'll approach it.
Yeah. Makes sense. Makes sense.
Yeah.
So let's see. 102. So we got just a few minutes until we get the EPS and revenue numbers, and hopefully forward guidance as well pretty soon, or maybe we have to wait for the call for that. But it looks like Palantir is doing pretty good going into close. I'm not sure how much percentage wise this is. Yeah, almost like 1% move. Like for Palantir, I guess that's not a ton, but you know, it's a decent after hours move just before the numbers even come out.
Yeah.
I'm curious if anyone's out there in the chat that's playing Palantir earnings. Would love to hear if you guys, you know, are in any positions. It's kind of funny, Matt. We always get people out there on both sides. You know, they're in calls or puts going into earnings, and like some people are just, you know, it's kind of funny to hear what people are, you know, trading going into it. So,
For sure.
yeah,
Now there's gonna be interesting because they're in a little bit in a world of their own, because they're one of the few guys like AI, but really enterprise focused. Like, I mean, their customers are, you know, UK Health Service or the Pentagon, you know, so it's going to be definitely, it's hard to kind of benchmark based on other earnings reports, like let's say Amazon or Meta, because their AI business is pretty unique to them, you know. So it's going to be definitely interesting to see how they report here, what they say.
yeah, definitely. Looks like we got a lot of new people out in the audience. We have like probably over 1,000 people total on the stream right now. So just real quick, if you guys aren't subscribed to TrendSpider or Matt's, you know, social channels, or live across both, go ahead and hit the like buttons on both the streams and subscribe. We're cross streaming across both of our channels. We'd really appreciate it. Love to see you guys out there in the audience. Looks like we got a lot of people on calls out in the audience. Said casino calls. Love to hear that. Should be fun. Should be fun. Or not fun. We'll see. We'll see in about 1 minute, probably. You know, Palantir's sitting close to $210 right now. Basically, I think it just literally hit an all-time high right now. Basically, yeah. So, you know, going into all-time highs in earnings, one of the most hype stocks on the market, is going to be very telling for the market sentiment going forward. So let's see what happens. I'm pretty excited for this. I don't really have a position in Palantir, unfortunately.
I think we all do indirectly, because if Palantir disappoints, I think, or if they
Yeah.
surprise and they impress, it's going to impact many stocks as a secondary. So, there we go.
There we go. There we go. Yeah, we're up 7% or so right now.
Very nice.
Palantir is absolutely flying, just broke to another new all-time high, over 220. We're going to see probably some pretty crazy price movement here. Yeah, that was a wild move. Love to see all you guys in calls out there. I'm sure you guys are having a ball right now. Let's see if we got numbers. Sometimes it takes a second for us to see them. Let me know if you're seeing them,
Yeah,
Matt.
I'm
I'm
seeing
sure.
online here the earnings up 110% year over year. I think they were
Okay.
expecting 17, came in with 21. Same revenue expecting $9, came in at $18.
So
Sorry,
double beat.
a billion point 09 came in at 1.18 billion. So it looks like they beat top and bottom line here.
Awesome. Well, I'd love to see that. Love to see that. That means, like you said, we all kind of have somewhat of a position here, because if it continues going up, that's going to be only great for market sentiment all around. Sure, there's a lot of happy people out there in the audience right now. Yeah, probably one of the most hype stocks out there. I mean, we got a bunch of people probably tuning in for the first time. We got, again, over 1,000 people on this call right now. So if you guys are on the chat, say what's up. Tell me if you guys are in any positions. Always love to see what you guys are trading. Palantir just had a double beat revenue, beat EPS. It is looking phenomenal. Oh, honestly, it's kind of giving away a lot of the gains as we speak.
I think the conference call is going to be really important. That's where all the guidance, all the details, which are really critical, that most people are going to pay attention to. So these are the initial. I always wait until the conference call to kind of really pull away too much from the quarter. But I mean, at least beating numbers immediately is great. And Alex Karp is just he's like Jensen Huang from NVIDIA. Like when he talks, he has such a confidence about him, and like a great understanding that usually he's like a net positive for when he talks. Some CEOs always carpet bomb their stock somehow. I don't know why, but Palantir kind of like similar to NVIDIA, that he does a great job when he comes on.
Interesting. And we got HIMS doing the exact opposite, by the way. It's down about 5%. If anyone's trading HIMS, I know Palantir is probably the biggest mover or biggest hype right now, but HIMS is also pretty big. Definitely not nearly as sentiment driving as Palantir, but unfortunately HIMS is taking a beating right now. Not great. But I am glad to see Palantir moving up. Let's see. Maybe we can see what NVIDIA is doing. NVIDIA is not really moving. They just announced a partnership. Just curious. Let's see if QQQ is moving. QQQ is loving this, moving up. SPY, pretty much moving similar to how Palantir is moving. So, as you said, we kind of probably all indirectly at least have a position in this one way or another. But yeah, trading around 214, 215 a share. So yeah, I'd say this is overall a great earnings report. Love to see this. I don't know how long you can stick around, Matt, but if there's any kind of final notes or anything that you haven't said yet that you wanted to say, you can go and do so.
I think just keeping like, I know we all like to cheer for our stocks. I try and stay unbiased as possible. Like
for
the old saying again from William O'Neill is the only good stock is a stock that goes up. Like that's why I try to get into my mind. It's not like our favorite sports team. It's good, it's great. If not, I'll see you later. So it's been a great year. I think AI is like a momentous technological shift. I think we're still early stages. Like every stock that's strong right now, Palantir, AMD, these are all infrastructure stocks. Like nobody here on this call is like using Palantir themselves. It's all the infrastructure stuff. So all of this spend, all of this build, like this is all similar to like when, with the internet, it was all about putting out the data lines and getting the servers and the routers. You go to the railroad days, this is the equivalent of putting the railways in the ground and building the actual, railway cars. Like the next step of all of this, where I think we're going to get even more incredible opportunities, is going to be when all of this AI tech, all of this stuff is going to be turned into like a fire hose of new products and new features that are going to come our way that are going to blow our mind. Like, the robo taxi is like one example. Think of how many things we're going to get. So I know people are just remain so persistently negative on so much stuff, and oh, it's a bubble or this and that. Like,
Yeah.
I don't know. Like, it just, we were talking about Peter Lynch before and stuff, and it's like, the Peter Lynch thing is like, what are the products around you that you're using suddenly? And like, I use ChatGPT for everything. Like, it's my
Oh, yeah.
workout trainer, it's my
Yeah.
it's my research assistant, it's my proofreader, and like, we're just, I mean, if I have a health issue, I'm going to put it in there, and like, I'll track it if I'm talking to the doctor. It's like my everything. Like, think of how that, when that starts to be applied to all the different tools in their life, like how amazingly uh, different our lives are going to be a few years from now. Like, I think we're like early innings. Like my playbook, I had a YouTube video about all of this, and I think like we're in the, like, maybe mid 90s of like a similar rollout of .com. So a lot of the fun is still very much to come, in my view.
Yeah, love to hear that. Love to hear that.
Yeah.
So I know even Powell was saying HIMS, by the way, is reversing and going up, by the way, as we speak. Now it's up like 4 or 5%. Very, very nice to see that. But again, guys, if you haven't, Matt just mentioned his YouTube channel. Go ahead and subscribe to Matt's YouTube channel. Subscribe to TrendSpider if you guys are here. I'd love to see you guys out there in the chat. We go live quite a bit, especially for big earnings like this. So yeah, thanks to you everybody for coming. I'd love to see this. Oh, and that's what I was going to ask. Like, even Powell himself was saying, it's not a bubble. There's tons of revenue, tons of profits. Unlike the .com bubble, where it was kind of all speculative stocks. So you're in the team no bubble then, huh, Matt?
I mean, like, there's always like, things can get a little overheated, but to me,
Yeah.
bubble, like, if you're going to say bubble, that means like we're about to drop 80, 90%. That's what a bubble
Right.
is. Like,
Okay.
Can we see 20, 30% drop? Yeah, of course. But like, bubble means like this is all, a waste of time and like way overdone. Like, I don't think that's the case, and even I know with NVIDIA, it's all about the circular investments and all the rest. And of course, there's some of that is always a bit of a concern, but like there's like real demand underpinning this. So like, that's why like the relative strength stuff is so important. Every cycle, the relative strength leaders are going to win.
Yeah.
And that's where you want to focus. And so if you're optimistic about the future, like, definitely be running relative strength scans. That is like the core of how you find winning ideas.
Yeah, 100%. And again, if you guys are interested, you can use the link I posted in the chat to try out the cars indicator on TrendSpider for just $9. So sign up for the trial. Actually, I'm sorry, the sale ended 12 minutes ago, you guys. I was saying earlier that it was for $9. I believe you could probably still get a trial for around 14 to try out TrendSpider, and you can get a 5-day free trial if you're already a TrendSpider user of the cars indicator using the link down below. It is a great indicator. If you guys missed a lot of this presentation or just kind of our chatting, you can go back on YouTube and watch it over later. Just go to Matt's YouTube channel. I'm sure he has tons of great stuff on there. And there's even a YouTube video on the indicator page that you made, Matt, which is really helpful. I watched that one. Yeah. So and it looks like Palantir is coming right back down. It's actually down since close now.
The conference call is going to be key. It's all, we have to hear what management says. So I after hours, unless it's a staggering beat, I always wait for the conference call before I kind of
for sure. No, definitely. Yeah, pretty crazy movement.
Thank you so much for having me on. I'm gonna have to bump off and get some other after hours work done, but it was a real pleasure. And anytime you guys want a little bit of discussion, I'm always glad to come back on.
Yeah, I'm sure we'll have you on again in the near future. But thank you so much. It was a pleasure having you on, Matt. I hope you have a great rest of your day.
Thanks. You too. Thanks again, Mike.
Yeah. Bye. All right, guys. So Matt just headed out. I know there's a ton of you guys out there, so we'll probably stick around here and see when the earnings call is. Let me know if you guys are still out there in the chat. We just had Matt Caruso on. He is an investing legend. I hope you guys appreciated that. I know I had a great time picking his brain. Super cool guy. That was an awesome presentation from him. His indicators, the cars, Caruso relative strength indicator that we were talking about. So yeah, glad to see you guys also out there. We're getting some wild price movement here on Palantir and on HIMS. Let me see what else was reporting today as well. Palantir, HIMS, we got UUUU as well. I'll probably pull that up in a second. BRTX. If you guys are watching any earnings on your end, let me know. Looks like UUUU maybe hasn't even, it's probably going to be in 1 minute for UUUU. We'll come back to that in a second, but let's check out Palantir because this one is going all over the place. Wow, this is some crazy price movement. Really, price really hasn't gone nearly anywhere at this point. It looks like we closed the day or around 206 and we're sitting around 208 right now. So we're up a little bit. We're up a little bit. How is Palantir now green after that beat? I mean, if it beat, I mean, it doesn't, you never know. You really never know with earnings. And as Matt was saying, it's going to be heavily reliant on what they say in the conference call, of course. Let's see. Palantir Technologies raises fiscal year 2025 sales guidance from 4 to 4. It's like basically 4.15 to 4.39. Wow. Their guidance was incredible, you guys. That guidance was incredible. Palantir, I mean, as you would probably expect, double beat, amazing guidance. Really cannot complain with anything that just happened on if you're a Palantir shareholder. Of course, the price went up and came back down a little bit since. But, you know, that was a great quarter. And, you know, if they didn't have a beat like that big, it probably would have been a whole lot worse for the stock price. So even though the stock, we'll see what happens in the current the earnings call. Well, really tomorrow will be really telling too, because again, the market's closed right now. A lot of retail can't even buy or sell. A lot of people are waiting till the conference call. You never know what is going to happen. HIMS is up a little bit, kind of going back and forth. Some pretty crazy price action. So let's see. What are you guys looking at? Took a very small short position just for fun. Paul, you took a short position in Palantir. That was a bold move, but I hope it well, honestly, I do hope it pans out for you, but I don't want I love seeing the markets go up as a trend follower. So well, yeah. But good luck. Good luck. Short in Palantir was never hasn't really been super great. But yeah, if you guys are still out there in the chat, love to see you guys out here. If you haven't already, hit the like button, hit subscribe, because we're going to be going live so many times throughout November for these, earnings call, you guys. So you guys don't have to do it yourself. You can get some live analysis just by hopping on YouTube. It's completely free. These streams, of course. Love to see you guys out there. So make sure you hit the subscribe button and hit the like button so you can come back for more, because we're going to have some more guests in the future, guys. We have another guest tomorrow. I won't reveal it yet until we get everything officially, penciled in. It is penciled in, but we're going to have another awesome, pretty big guest tomorrow as well. And yeah, going to be some great shows for you guys throughout November. I think we're going live nearly every day this week. I'll be hosting a live, I think every day except for Friday. So hit that notification bell because we're going to be going live again nearly every day. It is earnings season, and the markets are doing great. I absolutely love what the markets are doing. Love the fact that we get to sit here and talk with investing champions as the markets hit highs like this. It is amazing. Let's see. What else are you guys looking at? Do you think AMD beats earnings tomorrow? Yeah, AMD earnings is what we're going live for tomorrow. Again, I don't try to predict earnings, but I will react to what happens during earnings. If we check out the daily charts of AMD, it has been pretty phenomenal. And you see, this is the CARS indicator, Matt Caruso's custom indicator that you guys can try using the link down in the description below. And it is still flagging that it's showing relative strength. And as you can see, when it started showing this, purple background, I think that's purple. I'm kind of colorblind, but the background that is identifying relative strength, that has really just gone up ever since. Honestly, a very, very fun and cool, useful indicator to use. So hopefully when you get another gap up like this tomorrow, a little power earnings gap on AMD, would love to see that. But again, going back to Palantir here, basically sitting at, again, all-time highs. Let's go after hours data. 207 is what we're trading at, basically exactly where we closed at. Everything that has happened in the after hours session, basically technically nothing has happened. It went up and went back down, came back to exactly where it started. But we'll see. We'll see going forward. But this has been cool so far. It's been cool so far. Been a great day for me. You know, it's not every day you get to have, you know, a guy that generated 346% annual returns in the U.S. Investing Championship and be able to talk with him like that. So that was very fun. Does Uber have earnings tomorrow? Honestly, I'm not 100% sure. I don't think so. They have earnings the 4th. Yeah, they have earnings tomorrow pre-market. Okay. So we'll be live later on tomorrow, but not pre-market. That should be a fun one. We'll probably cover that in our stream tomorrow. It should be around 3:45 Eastern. When we'll go live for AMD earnings. But yeah, guys, double B. If you guys are just tuning in, double B on Palantir earnings, and it's been, I mean, really not really good or bad price action wise. We're really just waiting to see what happens going forward here. Let's see. ARM, yeah, I think ARM is coming up as well, you guys. ARM is coming up as well. Well, we got a little bit for ARM. We got November 5th pre-market in a couple days. Get another pre-market one, but we will be live later on the 5th. So we'll go and cover that on the 5th. Which when is that? Wednesday, probably. Yeah, Wednesday. We'll cover ARM, cover AMD tomorrow. Let me see. Going back to HIMS is what I wanted to check out. Brandon, TrendSpider, good day. I had a question. Let's see. It's for NQ futures, but it relies on points entry. Can TrendSpider edit my code works to send alerts to trades post? Yeah, it should work with trades post from what I know of. If you're on TrendSpider, though, there is a contact us button right there at the bottom right of your screen. That would definitely be a question suited best for our support team. And they're pretty much available almost 24 hours a day. I don't think it's technically 24 hours a day, but they are very responsive. They are very good at what they do. So with a question like that, I would ask with them because they can kind of help you a little bit more personally with that. Isn't that earnings? Earnings is today for actually November 3rd. Yeah, that's today post market. I don't see actually earnings released for them. Yeah, or at least the price isn't moving. It is tomorrow. Let me double check. It says today. It should have been released about 2 minutes ago. Q2 August 6th. Yeah, I'm not sure what's going on with UUUU, but it should be, I think, before today. I just don't see the price moving at all. Maybe it's delayed or something like that. Let's take a look at Palantir. Any reason why it went down? I mean, it's actually Palantir's moving back up right now. I mean, guys, I wouldn't stress too hard about what the price movement is right now. Wait for the earnings call. The numbers they provided were great. The market was, I would say it's expecting the market, the numbers to be great, but almost like required for the numbers to be great, trading at such a high valuation. The call should be in about probably 40 minutes for Palantir. So, and again, if you guys are just tuning in, Palantir did have a double beat on earnings, great forward guidance, beat revenue, beat EPS. They reported, it looks like 1.18 billion in revenue. That's a 62% year-over-year growth. EPS, 21 cents a share. It's a 40% surprise, over 100% year-over-year growth. Yeah, really can't ask for much more than that, you guys. I mean, that was one of their, let me see, revenue-wise, 62%. That's one of their highest growing quarters that they've had since 2020. Probably their best ever, really. I mean, absolutely incredible. Absolutely incredible. But as you can see, the market really has just expected that, and it hasn't really moved up much due to it. Oh, let's see. Let's check out HIMS. I think, yeah, 0.06. So HIMS actually, it looks like they had a, we can cross confirm this. Let's see. Hims and Hers Health sees Q4 sales lower. So they lowered guidance on Hims and they're up, believe it or not. And EPS missed the estimate. 6 cents missed the 9 cents estimate. Sales beat. So they beat revenue, missed EPS, which is, a half good, obviously. Let's see what they're saying. For guidance, sales guidance narrows from 2.3 to 2.4 billion to 2.33 to 2.35. So it's about on par forward guidance with what they were expecting, but definitely not the best guidance I've ever seen. But the stock is up after. I'll just check out NVO. NVO is, I guess I would say up on that news. Let's see. We got Palantir ticking down a little bit right now. Really fun stream, you guys. If you guys missed the stream earlier, we were live with Matt Caruso. So make sure to hit the like button, subscribe, and then go back and watch that later because it was super fun picking his brain, seeing how he uses his relative strength indicator. Because it is flashing, the signal right here on Palantir, and it has been this entire uptrend, you guys. If you look at the daily chart of Palantir, I mean, this indicator pretty much kept you out of everything. And then the second it started flying and rocketing higher, if you're using cars as, your filter, it was showing you Palantir and flashing strength ever since pretty much this 2024 bottom. So very, very nice indicator. Go back and watch the stream if you want to see us covering it in real time. It was a great time. Let's see. Yeah, I mean, Palantir is a great stock. Can't wait for AMD earnings. Yeah, AMD earnings should be super fun. So will ARM. AMD is probably going to be a lot more hyped than ARM, but, it'll be a good time for both. All righty. Let's see. Does anybody have any questions out there? I know there's a lot of you guys out there on the live. Let me know if you guys have any questions about anything about the platform, about the cars indicator. Unfortunately, you already missed Matt, who's the creator of the cars indicator, but I'll do my best to answer the questions for you guys. Or just anything in general. Let's see. Predict some NVIDIA earnings in a few weeks. Hold on. There's a couple things here. How did you get that bubble chart? Sorry, this chat is flying. How did you get that bubble chart where you could see where all the money is flowing, like sector? Oh, the stock market map. Yeah, this is a great. We didn't even cover this today. We're so focused on earnings. Under the stock market map, you can build a bubble chart, customize it. I personally you can use this for any watch list to see where strength is flowing, but I use it in the I have a sector ETF watch list, and essentially has all the sector ETFs, of course, like XLY, consumer discretionary, utilities, gold, semiconductors, gold, silver, all that stuff. And then I have a horizontal axis and vertical axis set up, so where horizontal is change percent since close, and this is going to show you where strength is flowing today. So the stuff very far to the right is stuff that is up today, which is semiconductors is leading the charge today. And so is consumer discretionary, which is risk on. So is gold, and so is XLK kind of up there. Sorry about that. I think it just updated actually, but semiconductors leaving. So is tech, and so is consumer discretionary. Gold is up slightly. Silver down pretty good though. So gold is holding up better than silver for now. But yeah, that's how you do it. And you can also change it from like 7-day calendar change percent compared to like, or sometimes I do like year for like these longer term trends, 30 days and year, or not year to date, year change percent. And so now we can see over the last 30 days and over the last year, what is outperforming. So stuff at the top right is really your true performers, which is, again, semiconductors, it's tech, it's gold, and kind of silver as well. Everything that's, I guess, not performing well. XLRE used to be kind of pretty low down there, but right now it's retail. At least over the last 30 days, XRT is down, and then materials, XLB is down pretty good, and along with real estate. So that's how you use it. It's a stock market map. And if you wanted to dig deeper into like tech, for example, you can change the list to any ETF holdings like XLK. And so now you can pretty much see what is outperforming specifically in tech. As you can see, AMD is actually in there. We got Palantir, Micron has been incredible. WDC, TER. So that's how you kind of break down the market and rotations, you guys. Earnings call for Palantir, I believe, is in 30 minutes. Let's see. I don't try to call tops, Brad Elliott's. I hope it's not a top because it's pretty fun when the market just only goes up, isn't it? Someone asked about Sidekick. I would love to tell you guys about Sidekick. Yeah, basically what Sidekick is it's TrendSpider's AI assistant. It's basically if you gave ChatGPT or your favorite LLM, Claude, access to all of TrendSpider's data and took out its internet access so it won't basically hallucinate. And so I've actually used it today. Let's actually start up another chat. And there's a few different personalities. You can use Karen, who's going to yell at you. You can use Warren if you're a long-term investor. It talks to you like Warren Buffett. We'll just go with neutral for now. I actually have a really good earnings prompt I'll find for you guys. Give me 1 second. And we'll actually have it analyze the Palantir earnings for us. And it does a pretty good job of it. Let me find the... the prompt. Just give me 1 second here, you guys. But yeah, Sidekick is very nice. I use it honestly pretty much every day. I have it analyze my scan results. I have it analyze my portfolio, tell me, the risks and, the pros and cons of my portfolio, where my money is allocated, and tons of stuff like that. It's really good at. Here is the earnings analysis prompt. And the reason why I'm getting this prompt, you guys, is because the better prompt you do, I spent a bit of time kind of refining this prompt. The better prompt you have with any AI, the better output you're going to get. And so this is kind of a long prompt, but I'm just saying analyze the most recent earnings for Palantir in simple language, no charts, just tables. It says deliver it in this order. I give a specific order. You guys will see it's basically right now pulling a bunch of fundamental data for, Palantir, and it's actually finding Palantir's competitors as well. I'm not telling it which competitors, it's doing it for me. And it has access to all the fundamentals for, all the stocks we have fundamentals for here on the TrendSpider platform, which is basically everything. And the best part is this isn't going to use the internet and find some random article and hallucinate. It's only going to use our actual market data that we pay for. And so any data that it spits back at you is confirmed data on our end. And that is kind of Sidekick in a nutshell. You can use it to build charts and tables. You can use it to compare. Here's this Palantir earnings kind of summary. So I'll just read it off to you guys. Palantir reported earnings after market close, obviously. EPS came in at 21 versus 17 cents, 25% beat. Revenue at 1.18 billion, beating by 8.2%. Guidance was strong, as I was saying earlier. Q4 revenue raised. And 2025 guidance lifted as well. So basically double beat on earnings and EPS and revenue, and lifted forward guidance, which means they expect to do even better than they were expecting to do earlier. Let's see. And then it right here, it builds a table comparing it to its competitors. So we see Palantir is up here. It shows, the revenue, net income, price to earnings, price to sales. You can see it has quite a big price to sales compared to stuff like CRM, Snow, DDOG, CrowdStrike. As we all know, Palantir is quote unquote fundamentally overvalued. But again, the revenue and guidance growth is just absolutely off the charts. And it's going to give us a bull and bear case as well. For the bull case, we see commercial explosion. Looks like U.S. commercial revenue grew 93% based on some validated news articles, which is very good to see. Obviously, they are a leader in AI. They just partnered with NVIDIA, as you can see, Boeing, Lumen. So yeah, killing it in the AI sector, which is absolutely massive right now. Yes, earnings are out. We're actually analyzing them right now, as I was saying. Double B all around, great guidance, as Sidekick said for us as well. And let's look at the bear case. I mean, everyone knows the bull case, but yeah, the bear case is basically the valuation. It's super high price, PE ratio is super high. Price to sales is super high. I guess Citron called it a $40 stock, which is kind of wild. Competition intensifying. Looks like Salesforce beat Palantir on a U.S. Army contract that it pulled from news. And then, of course, you got the massive Google, Microsoft, Databricks starting to emerge as, competitors as well. Execution risk. Former CFO warned it. What do you say? Lights equity on fire on small contracts, which leaves profitability vulnerable if deal sizes don't scale, which is interesting. And bottom line is always a great thing to read from an AI output. It says Q3 is a blowout quarter with strong guidance and, a double beat. And basically what I've been saying, like any miss in guidance or cut would be absolutely terrible for the stock. So I think that's the main thing to watch out for. I'd say the stock's probably in the clear at least till next earnings. But if not, there will be some downside risk. So that is Sidekick. Very nice tool. As you can see here on the Palantir chart, we're up a little bit since the market close. Market closed right around here at like the 207, 208 level, and we're sitting at 209. So we're just barely up. Yeah, Paul, it is incredible. If you guys aren't TrendSpider users yet, go to TrendSpider.com, check it out. And yeah, it is an amazing platform. Let me see something real quick. If you guys have any more questions, I'd love to answer them. We've been live for, I don't even know how long at this point, you guys. We're going to be live all the time for the next week or so. So keep tuning in the rest of the week to our lives right around the same time, a little bit later tomorrow. But yeah, you can start a trial of TrendSpider, even though our Halloween sale just ended, for $19, you guys. So it's just $19 to try out this entire platform for 2 whole weeks. Free Sidekick free is not unlimited messages. We did increase it to 25, which is actually pretty solid. 25 messages. You can make that last pretty long, but any additional messages will require a subscription because it is pretty expensive to run this, you guys. Like how much it costs to run AI and pull all that data at once. It's not cheap. Not cheap. Yeah, 25 per month, but try it out. Just really nail down your prompts, and I'm telling you, you could probably make that last quite a long time. And if you guys are just tuning in or new to TrendSpider, hit the subscribe button. We just recently dropped a video explaining RSI divergences, if that's something you're interested in. It's a pretty cool, pretty quick video. It's about 6 minutes long. Shows a couple custom indicators that we have on the platform made by the community. Also, if you guys are like, indicator builders, like we just had Matt on, he has an awesome indicator that we're just portraying here on TrendSpider Live. If you guys have an indicator that you use, or maybe you're a community leader yourself, you can post it to the TrendSpider platform and even sell it if you wanted to charge your community to use an indicator. On the TrendSpider store, anybody can post an indicator. We just have to approve it, and it goes on, and you get tons of visibility to all of the TrendSpider community. Can a person do well starting out with the minimum TrendSpider membership to see how things go? I mean, yeah, absolutely. I mean, I would recommend the premium plan, but if you're really wanting to, yeah, I mean, the minimum TrendSpider membership is just fine too. I mean, you still get access to pretty much like most of the features. It's just some things are limited, like you have less trading bots than normal, less like trainings with our customer support. I think premium is by far the best deal, but the lowest tier would be fine, and you can always upgrade later on if you like it. Yeah, Silverstream. A lot. I mean, a lot of people that use TrendSpider. I'm a swing trader. I don't really day trade at all. Matt Caruso, he was more of a swinger position trader, as he was explaining earlier. It works great, really, even if you are even just an investor. With our market scanning capabilities, so all the features that we have on here, it really doesn't matter what kind of trader or investor you are. It will, as long as you learn, put in a little bit of time learning how to use the platform, it will help you guys out a ton. Like for me personally, I have like a market scanner built for my specific trading setup, kind of like how Matt did with his. If you look up like this emerging cars scan, he has like a similar type of scanner, but I mean, you pretty much just scroll through these, and you can even have these scan results. You can run it on a schedule and have the scan results every day sent right to your email with the scheduled scan. So you guys will never miss a trading opportunity. It pretty much automates your research process. And then from these scan results, you can actually use Sidekick to analyze them. You can have it break it down by sector. You can have it compare all of these scan results and put in like your specific strategy and your trading methodology, or just ask it anything and have it break down your thoughts. Let's see. JP, what was your reasoning for Palantir beating but moving like this? Let me take a look at the chart again. Basically, Matt Caruso, who we just had on, was saying that it's all going to depend on the earnings call, which I would agree. Everybody was expecting Palantir to beat on earnings. In fact, if they didn't beat, it would probably be really bad because they have a super high valuation. But once you hear the CEO talk, you hear the Q&A, you hear what they're actually saying, human to human, kind of like what you're seeing on this live stream, is when the potentially the real move in the stock will come. Sly Fox, this is a live stream. You're joining pretty far. I mean, we've been live for just about 2 hours now. We were talking markets the whole time. If you guys are just joining, it's pretty much coming right to the end. We're probably going to wrap up this live stream pretty shortly. But yeah, you guys can go watch, previously what we were saying. We had an U.S. investing basically champion on. He made 346% returns in 2020. He was giving his thoughts on the market. It was a super insightful show. So if you missed all that, you can rewind and watch it. Yeah, I would not say this is an ad. But, we're on the TrendSpider platform. People are interested in it, obviously, because there's tons of cool features, and I'm just breaking them down. Glad to hear, Silverstream. It's definitely worth picking up a trial to at least try it. Why this? Can you explain why the spike lasted like 5 minutes before it dipped back down? There's not really rhyme or reason. I think people just got overly excited with the beat, and then maybe some profit takers going in before the call starts would be kind of my thoughts. But it's really kind of hard to predict exactly why that happened, or know specifically why that happened. Will the call be streamed here? Let me see if I can get it for you guys, because I think it's coming up anyway. So honestly, might as well. Got a bunch of you guys out there. If you guys want me to stream the earnings call, let me know in the chat below. Hit the subscribe button and like, because I'm going to have to use my PC to do that. Sign up, give them my email. So I would appreciate a like and a subscribe if you guys are going to stick around for this. Let me see if I can get it. Webcast. I think. So the earnings call starts in 14 minutes. Yeah, I'll go ahead and stream it for you guys. Why not? That was my platform, my TrendSpider personal account. But yeah, let me real quick set my stream up so you can hear the earnings call when it goes live. I'm going to go ahead and stream it for you guys. Yeah. I'll stream it for you guys. Why not? Let me I'm going to have to remove my screen real quick. And reshare it. Give me 1 second here, just so I can get the volume for you guys. We're not going anywhere. Don't worry. There we go. You guys are lucky we don't monetize this channel, because we've been getting, I think, copyrighted for streaming these earnings calls, but it's whatever. It's worth it for you guys. Yeah, so once it starts here in 12 minutes, we'll go ahead and stream the call live for you guys. I'm curious for all you guys out there that are going to be watching the earnings call, if you guys are on Kalshi betting on anything. Thank you so much for everybody that's liking and subscribing. I honestly appreciate you guys so much. Love to see everyone out there in the chat, except for you haters. Just kidding. I even love the haters for showing up. But yeah, this should be a fun earnings call. Since it's going to be live stream, I'll probably pop off and just let you guys listen to it. At least remove my face and replace it with a little screen of the call. I don't think we're going to see anything on the call itself, but we'll stream it for you guys. Again, it starts in 12 minutes. We'll have that live. Yeah, exactly, North. Without haters, how would we go higher? Exactly correct. How is Hims and Hers doing? That's a great question, honestly. Prediction after earnings, like tomorrow? I mean, let's take a look. Hims is doing okay. They're actually probably, yeah, they're up like 5%. They're doing pretty good. Let's check out the daily chart of Hims. Look at that. Wow, this chart includes after hours and pre-market moves, which is why it probably looks different maybe from your daily chart. But you see this massive wick down the 40. Look at that. If you draw a horizontal line right here, people say technical analysis doesn't work. Well, look at that horizontal line. Look at that. 1, 2, 3, 4, 5 reactions on that line. Let's drag it a little bit farther. I guess that's the most of where it goes. So we'll see. Hims is the fact that it's touched that line so many times is interesting. But if you look at Palantir, I'm like more of a swing position trader as well myself. If you look at the daily chart, you can see we had an all-time high back here in August, pulled back, a little bit of a breakout from this base, based up again in a breakout. And usually when, like, some good insight from Matt Caruso earlier. I was asking him about breakout trading. He was like, it's usually good to buy a pullback from the breakout. So if you believe in that, which is pretty good advice, technically we did break out of this base right here, but maybe before getting in, you wait for it to pull back, maybe down to like this breakout candle, somewhere around in this range. He mentioned he likes the 8 and 21 EMAs. If you put the 8 EMA on your chart, it's sitting there right under 200. So maybe wait for a pullback to that before getting into Palantir. Not financial advice, you guys, but probably better than buying at this all-time high, unless it just continues to fly, which it definitely could. So we'll see. We will see. Call sell is huge effect. Is that where the most movement will occur? That's a good question. It's hard to say, honestly. If there's going to be more movement from the call, it depends really on what they say. If they say something kind of wild, it could have more movement. I wouldn't expect it to move higher than where it already went, but I would expect it to potentially be able to move lower than where it went if they say something bad. But I wouldn't expect it to go higher than where it went before, personally. Again, this is all really speculation, guys. There's really no predicting what's going to happen during an earnings call. So, yeah, the earnings call starts in 9 minutes. We're going to be streaming it live. No earnings call yet. It'll just stay tuned into the stream, you guys, because once the earnings call is live, it will. You're going to hear it on the stream. So yeah, if you guys are new, again, hit that like button, hit subscribe, because we are going to be streaming tons of earnings call this week. We got AMD tomorrow with yet another guest who you guys will see tomorrow. Oh yeah, if there is news on splitting shares in this earnings call, that would be absolutely insane. Honestly, they would probably if they are going to do it, they probably would announce it in an earnings call, wouldn't they? So, yeah. Definitely stick around for the next, what is it, 8 minutes now. We're seeing some decent movement here on Palantir. Broke out and came back down, retested this 90 EMA. It's really been choppy going into this call, but we got like a couple more earnings candles to go. I mean, 10 to 1. I mean, it's only a $200 stock. That's going to rate down to $20 a share if it does. Tell us my gut. What about where the stock is going to go or the stock split? I mean, just my kind of biased analysis here is that, like if you look back here, you turn off after hours data. Let's just look at similar things that have happened here. I mean, look at this. We had an earnings gap up here on February 3rd, 2025, and it pulled back pretty good. I mean, this was, I guess, different. That was kind of the tariff stuff going on. Earnings here pulled back. Let's see let's find like a breakout, because look at what's going on right now. We have, I guess this one's pretty good. If the same thing happens with this earnings, look at this. We had a gap up for earnings, power earnings gap. Kind of traded higher for a little bit and then pulled back roughly, I don't know, 20% or so. So if something like that happens, it pulled back into the recent base. So that recent base would be right around here. It probably would be good to buy on a pullback down into, if it pulls back to here. If you believe in the company going forward, we'll see what they say on the earnings call. But, like a 20% move down, if we're matching that time versus now, would bring us basically to the bottom of this channel. Not channel, like you say a base. Or you could, try buying with the moving average if you expect that to hold. Eight's a pretty fast moving average. Maybe the 21 EMA if you want to be a little bit more conservative. I am personally a pretty big fan of the 21-week EMA, which is down there at about $1.65. And on the daily chart, yeah, that's pretty much at the low, right around this area. So I'd say anywhere, I don't know, maybe under this breakout level would be probably more ideal to buy, obviously, than kind of on this massive breakout here. But again, I'm just here streaming this call for you guys. I am not a financial advisor. None of this is financial advice. I'm just a guy that likes this, trading myself, and so take all this with a grain of salt. If you want to hear from an actual expert, you can go back and watch the stream that would happen today earlier with Matt Caruso. He is the U.S. investing champ. He is the CFA. He's the one that you want to be listening to. Let's take a look at UUUU. Someone said they reported, and it looks like let's see, revenue. Let's see the EPS, negative 7 cents a share. Doesn't look super great for UUUU. Looks like revenue was decent, I think. Yeah. EPS like a half beat there. Yeah, EPS miss and sales beat. Yeah, this one's pulling back. UUUU. Let me see if that Palantir earnings stream is going to be here yet. Starting in just a few minutes, I'll get it live streamed for you guys. In just a few minutes. Yeah, I mean, I share my experience, I don't have any Palantir, unfortunately. So I have no actual monetary interest in this name at the moment, other than I like to watch my other stocks go up, which they probably are since Palantir is going up. Let's take a look at how the SPY is doing. Yeah, I guess SPY is hanging in there. Not really up, not really down since close, which is, fine with me. What positions are you guys holding? Because I'm curious to know. You guys are in calls, you're in puts, you're long shares. I saw all types of positions. Saw guys shorting shares. Saw some people that were in long calls. You want to know about my portfolio? Well, my portfolio is honestly not even open at the moment because it's all managed by my TrendSpider bots and signal stack. I guess I can go over a couple names. I'm in MU right now, personally. I've been loving that one. You guys want to know something I've been trading? It's MU. Recently traded CDE, which is a gold trade, and I'm out of this one since it, started leaving that uptrend. So as GLD, so I'm, trade out of that. Couple of fun plays I've had recently is VICR. I got in before this massive gap up. Same with GH has been super fun for me. Let's go back to Palantir because I think the earnings call is about to start. Here we go. All right, so earnings call is about to start, you guys. Got it right there in the corner. Now let's see what's happening. Don't hear anything quite yet. Looks like we got a little bit. Yeah, MU is great. I'm actually in Broadcom as well. I don't even know how they're doing today, but they've been good. All right. Should get something on this call any minute now. Do it is 1:59 Pacific Standard Time. And now it's 2. So the call should be starting any seconds.
Good afternoon. I'm
Here it
Anna Sara
goes.
from Palantir's finance team, and I'd like to welcome you to our third quarter
Can you guys hear that
2025
earnings call? Let me know.
We'll be discussing the results announced in our press release issued after the market close and posted on our investor relations website. During the call, we will make statements regarding our business that may be considered forward-looking within applicable securities laws, including statements regarding our fourth quarter and fiscal 2025 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
We had a monumental third quarter, shattering expectations yet again. Our overall revenue grew 63% year over year and 18% sequentially. We outperformed across the board, driven by strong execution in the US, which accounted for 3/4 of our business in Q3, growing 77% year over year and 20% sequentially. Our Rule of 40 score soared to an unprecedented 114, up 46 points year over year and a full 20 points since last quarter alone, reinforcing our position as the defining enterprise software company of our generation. Our US commercial business grew an incredible 121% year over year and 29% sequentially, driven both by insatiable demand and the quantified exceptionalism compelling customers to scale AIP across their operations. Organizations are embracing an undeniable truth. Real enterprise AI at scale requires Palantir. We're seeing that AIP, again and again, is the only platform delivering transformational impact in this market. And critically, AIP is the only AI platform that has an actual plan for compounding your enterprise's AI leverage, not just the model maker's leverage over you. Sharing this leverage with our customers is our highest priority. Our whole company is singularly focused around value creation for our customers, and I'm proud to share with you all the fruits of our labor. We closed our highest TCV quarter ever at $2.8 billion. Underlying this performance, we closed a staggering 204 deals worth $1 million or more, of which 91 deals were worth $5 million or more, and 53 deals were worth $10 million or more. In our US commercial business, which now accounts for 34% of our overall revenue, we closed $1.3 billion in TCV, a milestone achievement for the fastest growing area of our business, with a more than 6x year-over-year growth rate on a dollar-weighted duration basis. The trajectory is clear. Customers are converting to larger enterprise agreements in short timeframes, reflecting both the expanding scope of their AI ambitions and the immediate impact our software delivers. A leading medical device manufacturer signed a multi-year expansion just 5 months after their initial contract, increasing ACV more than 8-fold. 2 weeks into their initial contract, the conversation evolved from a single use case to pursuing the opportunity of becoming an AI-first enterprise. Their CEO approached me to embrace a shared vision for an enterprise-wide AIP deployment to transform their entire organization. This transformation reflects a broader pattern we're seeing across our customer base. AI is a strategic imperative owned at the C-suite level, with executive leadership recognizing that enterprise-wide AI adoption is the defining factor separating the AI haves and the AI have-nots. We're seeing C-suite-driven AI transformations across our customers. At a leading insurance company, the CEO has taken personal ownership of their AI transformation, meeting with our team regularly to orchestrate a company-wide transformation around AIP, reimagining every function from underwriting to claims processing, leading to a significant expansion of our work together. Our partnership with TWG Global, named Vergence.ai, continues to gain momentum. As TWG's Thomas Toll noted, quote, "What was once a competitive advantage is now a competitive necessity. Companies that fail to incorporate AI into their core operations will be outpaced by those that do." These examples underscore what we are seeing. We are the only platform bringing true transformational impact to the enterprise AI market. Turning to our US government business, revenue grew 52% year over year and 14% sequentially as we continue to deliver mission-critical capabilities. We remain deeply committed to our founding mission of supporting the US government, honored by the privilege of equipping our nation with transformative software that actually works. We remain focused on delivering the most advanced defense capabilities in the world to the US government and internationally to our allied partners around the world. The momentum we're carrying into Q4 is extraordinary. As we look towards the end of the year, our mission is clear: deliver the production capabilities that turn AI from promise into performance for the enterprises defining the future of their industries through AIP's compounding AI leverage. I'll now turn it over to Sham.
Thanks, Ryan. 20 years of grinding has built a unique moat and a growing lead. Our products were built for this moment, and the numbers continue to show it. Realizing value from AI in the enterprise requires the elegant integration of LLMs, workflow, and software. And this is only possible with ontology. Our foundational investments in ontology and infrastructure have positioned us to uniquely deliver on AI demand now and in the world ahead. The most significant product developments are the accelerating progress in our AI applications inside of AIP. AI FDE, our AIP native development agent that understands how to connect to data sources, how to integrate and transform data, how to create ontologies and functions and build applications. It's unleashing incredible speed and productivity for our FDEs and customer developers alike. At one customer, 2 human FDEs spawned an army of AI FDEs to migrate a customer off their legacy data warehouse in 5 days, something that would have taken an army of SIs up to 2 years. This is not a prototype, this is production. Across our customers, the results are shocking. AI HiveMind is a new AIP capability that orchestrates a swarm of dynamically generated agents to tackle hard problem solving, idea generation and refinement, and executable proposal generation that is integrated with ontology and therefore aware of the context of your enterprise. AI HiveMind was originally developed to solve extremely complex problems in the classified space, but it's already been used to help our commercial customers identify bottlenecks in their supply chain, proactively developing possible solutions, and then leveraging AI FDE to code that up into an actual solution. In the government space, AI HiveMind is able to take its proposals and generate intricate mission plans right in Gaia and Maverick. Our focus with AIP continues to be enterprise autonomy, our normative view of where the value is for AI in the enterprise. HiveMind now lets the AI develop novel solutions to emergent challenges and to identify hidden opportunities. And the rest of AIP enables you to turn those ideas into an implemented reality. Closed loop evolution of the business with AI possible because of AIP and ontology. We continue to make investments that allow enterprises to extend AIP to the far edge. Edge Ontology is a new lightweight implementation of ontology that runs on mobile devices and enables customers to build mobile applications or embedded software for hardware, things like drones and robots, and is fully integrated with your enterprise's AIP instance. Turning to field-facing updates, the U.S. Army issued an official public memo directing all Army organizations to consolidate and centralize on Vantage, the Army data platform built on Foundry and AIP. The Army views this not merely as a technical decision, but a cultural decision, enabling the data-driven decision-making that continues to make our Army the most lethal in the world. This directive will enable the Army to rapidly sunset legacy systems and enable more investment in the Army's future force, concept, and systems. Warp Speed and the American Tech Fellowship, our early investments to support manufacturing and reindustrialization in America, are bearing fruit. While Warp Speed launched by helping new defense entrants meet their surging production goals, it's now being rapidly adopted across the traditional defense industrial base and the maritime industrial base. The second cohort of the American Tech Fellowship will be wrapping up in the next few weeks. We started the American Tech Fellowship because we noticed that many of our best builders were frontline workers. They don't come from conventional consulting backgrounds. They don't have formal computer science backgrounds. To highlight a few of these folks, Mason, a Louisiana-based civil engineer, is building AI applications for more accurate estimates for heavy construction projects, something that is only going to grow with our reindustrialization. Michael, who works for a potato farm in North Dakota, is streamlining its operations. And Cody from Georgia, who is a utilities expert, is building in Foundry to deliver safe, reliable energy across the South. These Americans are the true face of innovation, underscoring that it will be the American worker with AI that drives reindustrialization and American prosperity. Our customers have taken notice and asked us to create American Tech Fellowship programs for their employees specifically, to include Lear, who highlighted their fellowship in their recent earnings call. With that, I'll turn it over to Dave to take us through the numbers.
Thanks, Shyam. We had an outstanding third quarter, achieving a Rule of 40 score of 114, our highest ever, by 20 points. We also generated our highest ever reported revenue growth rate of 63% year over year, exceeding the high end of our prior guidance by 1,300 basis points and representing a 3,300 basis point increase compared to the growth rate in Q3 of last year. On the back of this extraordinary strength, we are guiding to revenue of $1.329 billion in the fourth quarter, representing 13% growth quarter over quarter, our highest ever sequential revenue growth guide, and 61% growth year over year. We're also raising our full year 2025 revenue guidance midpoint to $4.398 billion, representing a 53% year over year growth rate, an 8-point or $252 million increase over our full year 2025 revenue guidance last quarter. In addition, we're raising our full year U.S. commercial revenue guidance to an excess of $1.433 billion, representing a growth rate of at least 104% year over year, a 19-point increase over the guidance we gave
Good
just last
afternoon.
quarter.
I'm Anna Sara from Palantir's
Accelerating
finance
demand
team,
for
and I'd like to
AIP
welcome you
continues
to
to
our
drive
third
the
quarter
outperformance in our
2025
U.S.
earnings
business
call.
overall, which grew 77% year over year and 20% sequentially in the third quarter. Our U.S. commercial business grew 121% year over year and 29% sequentially, and our U.S. government business grew 52% year over year and 14% sequentially. We delivered these exceptional top-line results while also achieving our highest ever reported adjusted operating margin of 51%, exceeding the high end of our prior guidance by 500 basis points and highlighting the unit economics of our business at scale. Our revenue and profitability drove a 20-point sequential increase to our Rule of 40 score from 94 in the second quarter to 114 in the third quarter. On a trailing 12-month basis, we generated $2 billion in adjusted free cash flow for the first time in the company's history. Turning to our global top-line results, third quarter revenue grew 63% year over year and 18% sequentially to $1.181 billion. Third quarter U.S. revenue grew 77% year over year and 20% sequentially to $883 million. Excluding the impact of revenue from strategic commercial contracts, third quarter revenue grew 65% year over year and 18% sequentially, and third quarter U.S. revenue grew 78% year over year and 20% sequentially. We closed our highest ever quarter of TCV bookings at $2.8 billion, up 151% year over year. This eclipses our prior highest quarter of TCV bookings just last quarter by nearly $500 million. Customer count grew 45% year over year and 7% sequentially to 911 customers. Revenue from our largest customers continues to expand. Third quarter trailing 12-month revenue from our top 20 customers increased 38% year over year to $83 million per customer. Now moving to our commercial segment. Third quarter commercial revenue grew 73% year over year and 22% sequentially to $548 million. This is the fourth consecutive quarter that revenue from our commercial business has been larger than our U.S. government business. Excluding the impact from strategic commercial contracts, third quarter commercial revenue grew 77% year over year and 22% sequentially. We closed $1.4 billion in commercial TCV bookings, representing 132% growth year over year and 32% sequentially. AIP continues to drive existing customer expansions and new customer conversions in the U.S. Third quarter U.S. commercial revenue grew 121% year over year and 29% sequentially to $397 million. Excluding revenue from strategic commercial contracts, third quarter U.S. commercial revenue grew 126% year over year and 29% sequentially. In the third quarter, we closed $1.3 billion of U.S. commercial TCV bookings, representing growth of 342% year over year and surpassing the billion-dollar mark for the first time. Over the past 12 months, we closed $3.8 billion of U.S. commercial TCV bookings, a 217% increase from the prior 12 months, highlighting the demand for AI production use cases. Total remaining deal value in our U.S. commercial business grew 199% year over year and 30% sequentially. Our U.S. commercial customer count grew to 530 customers, reflecting growth of 65% year over year and 9% sequentially. Third quarter international commercial revenue grew 10% year over year and 5% sequentially to $152 million. For international commercial business, we continue to capitalize on targeted growth opportunities in Asia, the Middle East, and beyond, but remain focused on accelerating the growth in our U.S. business. Revenue from strategic commercial contracts was $2.9 million for the quarter. We anticipate fourth quarter 2025 revenue from these contracts to be between $2 to $4 million, compared to $9.6 million in the fourth quarter of 2024. We anticipate 2025 revenue from these contracts to be less than half of 1% of full year revenue. Shifting to our government segment. Third quarter government revenue grew 55% year over year and 14% sequentially to $633 million. Third quarter U.S. government revenue grew 52% year over year and 14% sequentially to $486 million. This growth was driven by continued execution in existing programs and new awards, reflecting the growing demand for AI in our government software offerings. Third quarter international government revenue grew 66% year over year and 16% sequentially to $147 million, bolstered primarily by our continued work in the UK. As previously mentioned, we closed our highest ever quarter of TCV bookings at $2.8 billion, up 151% year over year. Net dollar retention was 134%, an increase of 600 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q3 of last year, as we see the effect of the AI revolution. As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our U.S. business over the past year. We ended the third quarter with $8.6 billion in total remaining deal value, an increase of 91% year over year and 21% sequentially, and $2.6 billion in remaining performance obligations, an increase of 66% year over year and 8% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 84% for the quarter. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $601 million, representing adjusted operating margin of 51%. Q3 adjusted expense was $581 million, up 8% sequentially and 29% year over year, primarily driven by our continued investment in AIP and technical hiring. We continue to expect expenses to increase in the fourth quarter as we remain committed to investing in the product pipeline and the most elite technical talent, all while delivering on our goals of sustained GAAP profitability. Third quarter GAAP operating income was $393 million, representing a 33% margin. Third quarter GAAP net income was $476 million, representing a 40% margin. Third quarter stock-based compensation expense was $172 million, and equity-related employer payroll tax expense was $35 million. Third quarter GAAP earnings per share was 18 cents. Third quarter adjusted earnings per share was 21 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 114% in the third quarter, a 20-point increase to our Rule of 40 score from the prior quarter and our 9th consecutive quarter of an expanding Rule of 40 score. With the increase in our 2025 revenue and adjusted operating income guidance, we are now guiding to a Rule of 40 score of 102% for the full year. Turning to our cash flow. In the third quarter, we generated $508 million in cash from operations and $540 million in adjusted free cash flow, representing margins of 43% and 46% respectively. Additionally, we achieved $2 billion in trailing 12-month adjusted free cash flow for the first time. Through the end of the third quarter, we repurchased approximately 2.6 million shares as part of our share repurchase program. As of the end of the quarter, we have $880 million remaining of the original authorization. We ended the quarter with $6.4 billion in cash, cash equivalents, and short-term U.S. Treasury securities. Now turning to our outlook. For Q4 2025, we expect revenue of between $1.327 and $1.331 billion, and adjusted income from operations of between $695 and $699 million. For full year 2025, we are raising our revenue guidance to between $4.396 and $4.400 billion. We are raising our U.S. commercial revenue guidance to an excess of $1.433 billion, representing a growth rate of at least 104%. We are raising our adjusted income from operations guidance to between $2.151 and $2.155 billion. We are raising our adjusted free cash flow guidance to between $1.9 and $2.1 billion. And we continue to expect GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Greetings. By any normal or even reasonable standard, these are not normal results. These are not even strong results. These aren't extraordinary results. These are arguably the best results that any software company has ever delivered. That's not hyperbolic, despite what your analyst friends may want you to believe, because they've been wrong at every price. They're wrong on at every single round. But of course, they're persuasive, and they're not investing their own money. But a normal enterprise company should not have a Rule of 40 above 100. A normal enterprise company at our base should not have over 100% U.S. commercial growth, should not have 77% growth in the U.S. And by the way, that growth is being held down by a stagnant Europe, which is still a significant part of our business. So the pure unvarnished numbers are 77% growth off of a massive, significant base with very significant cash flow, with a company that throws off a Rule of 40 of 114. And then if this world was at all sane, every single person in the financial world would stop and say, how did this happen? How did a company which stood by the American warfighter, Marines, special operators, people in clandestine services, who stood up for our right of free speech and was really the first company to be completely anti-woke, how did this company stick up for the American warfighter, actually give normal Americans venture quality results? So one of the issues we have with the arbiters of truth is it was the American worker that we supported and the American worker that we helped make rich. And the arbiters of truth somehow did not participate in that because they were such experts. And of course, but what these numbers show is doing that and taking the American worker along with it, and doing it in a way that foreshadowed the future. FDE, Ontology, Foundry, making each specific institution, making the American warfighter fight the way the American warfighter is born to fight, empowering the tenets of being, free and having the ability to do creative things in the battlefield context, and then taking enterprises, instead of selling them commodity parasitic software with a massive sales force, with a kind of lumbering, jargon-bearing leaders offering you steaks and dinners and other things we shall not mention in order that you turn the value, the high value revenue of your enterprise over to them in return for these accolades. We created direct alignment with our customers. And what does that mean? It means when our customers have a unique and tribal way of doing something, whether it's underwriting or fighting or making workers even more valuable, we put an FDE, we orchestrated an ontology, we take the tribal understanding of their business, the specific nature of their business that makes them particular and valuable and lethal, and we empower that. And how do we participate in that? Unlike seemingly in the most obvious way, we are downstream from the value creation. So when you see 141 or you see 77% or 63 and you ask, and by the way, with really a workforce that is not growing in any way linearly proportional to that growth, and also with a sales force which is declining, which seems improbable, the reason why that's working is because we are making our clients more money, or we're making them more dominant on the battlefield, and they're paying us a subset of that. And this is why these numbers are so extraordinary. The sociological and political version of this should be, wait a minute, how can we learn from this? How can we implement institutions? By the way, we have all these people talking about an AI bubble. I'll tell you what 114 proves. There is a massive part of the AI market that actually cares about value creation, and that's the part we own. And we own that part because to do this, you have to have FD orchestration, you have to have ontology, and you have to have Foundry, and you have to have access to the game. And you have to have deep understanding of how to do that. And you have to have done this for a very, very long time with products. By the way, and then the products are getting better and better and better and better. And I'll let Shyam talk about what we're doing on the battlefield to the extent that he can, but you see the very similar trajectory where we're giving America, both in industry and in government, a massive unfair advantage. And again, you see it, like if you look at our numbers, look at how poorly Europe is doing. Look how well America's doing. Look how we're doing this. And again, it's not just top line. The rule of 114 that we have shows top line and bottom line growth that is distinctive, massive, and unique. And on top of everything else, there is this issue in the U.S. that we're all focused on at Palantir, which is what portion of the GDP growth that we're blessed to have in this country, meaning GDP growth defined or helped out and bolstered by AI, what percentage of that is available to the American worker? And so when we're AI GDP availability for the American worker, meaning do they participate in this growth, or is it just people around this table who are getting richer and richer? And then you see our platform on the battlefield, as Shyam was mentioning, the people doing the coding in AIP are vocationally trained, smart Americans with specific knowledge. They don't have, and you people on the factory floor, very same thing. People across the nation, truck drivers, anybody with specific domain expertise is more powerful, more valuable in our product than they were yesterday. In fact, the real misalignment of AI is with people with commodity, like high-trained elite institution, general specialists. That's just not as valuable as it was. And yes, the destructive, positive destruction of capitalism is going to put that class of people, typically the class of people that also is kind of skeptical of Palantir, under enormous pressure. But it is what I see in these numbers, and what I think we see in these numbers is, to put it slightly over the top. Well, yeah, we were right, you were wrong, and we are going to go very, very deep on our rightness because it is exceedingly good for America. It's exceedingly good for the American economy. It's as good for American workers. And you know what? I really enjoy turning on TV and seeing some analysts explain why some other company is better than ours simply because they didn't make any money on our company and probably aren't. And we're just going to keep going and going and going. And then we're obviously not going to forecast for next year, but I would say if you're thinking about how this company is going to go, look at our ability to value create, look at our ability to create revenue on the top end, look at the unit economics of our business. If you're a technical expert in how do you evaluate business, evaluate those numbers against any other business you've ever seen, and then make your decision. But yeah, I'm wildly enthusiastic. I think we're wildly enthusiastic. And thank you for those of you who stayed with us to enjoy these numbers, especially Palantirians who work day and night to deliver these kind of numbers.
Thank you, Alex. We'll now turn to questions from our shareholders before opening up the call. We received a few questions asking, what do you see as Palantir's unique differentiator that others may not understand?
Well, Alex mentioned a bit of this here. You know, it's become fashionable actually for lots of companies to start hiring FDEs. The Financial Times had an article about how it's the most popular new job title. But what you see is that they don't really understand it. It's just mimetic. And everything Alex you said, like we build software that works, not software that ought to work. We build software for the world as it exists, not a world that never was. And this ability to find what's true, that comes from the FDE. Our measure of success is not did we sell the software, it's did we solve the problem. And we have built an entire software stack over 2 decades downstream of creating value for our customers. That led to the ontology a decade ago, more than a decade ago, which is a fundamental prerequisite to getting value out of LLMs in the enterprise. And this past year, it led to AI Hivemind and AI FDE.
The other thing, which is implicit in that, is the way we work forces us to go up the chain of complexity every day. So we're taking on the most painful, most integral, most valuable parts of the stack in every enterprise. And it's precisely because that's the way we actually lever our ability to deploy and orchestrate FDEs. That's the way we make our product stronger. And quite frankly, that's the way we produce these numbers, because the closer you are to the front line of the very complex problem that a black box was not meant to solve, cannot solve, and at this point everyone knows a joke to believe it could solve, that's where you and by the way, it's the safest position for us, because this company, we will always believe that we are outsiders. We need to be in the place where the most valuable problem is being solved, because that's the way we end up staying, solving the problem tomorrow, and the way we get paid.
Thank you both. Our next question is from Dan with Wedbush. Dan, please turn on your camera, and then you'll receive a prompt to unmute your line.
Which one?
And then with the actually.
Mr. Dan Ives, we don't see you.
Hello.
Oh, there you are.
Yeah, great. Look, obviously another monster quarter for you guys. Congrats. So my question for you is, for Alex and the team, can you just walk through just the accelerated sales cycles that you're seeing from so many companies that have gone to the boot camps? Like, what surprised you from when they come to you at that first sort of, contact to now actually launching deals? I mean, maybe you could talk about that just in terms of everything you're seeing anecdotally.
Great. Thanks, Dan. So I think, we look at U.S. commercial. We closed $1.3 billion in TCV. That's 6x on a dollar-weighted duration basis from what it was a year ago. And of those deals, 83 were worth $1 million or more, 40 were $5 million or more, 21 deals were $10 million or more. I've been involved in a lot of those directly. I'm feeling exactly what you're asking on the ground from customers. And what's happening now is from the C-suite across the company, customers are coming to us looking to not just say, let's do a use case. The customers where we're having the most impact are coming to us saying, how do we deploy this across our entire organization? How do we reorganize our entire organization around Palantir and AIP? And that's what's happening on the ground. And we're singularly focused on delivering the value to the customers, and that's our go-to-market. How do we get the product to them and deliver the value?
Where Ryan is really very much on the front line here is, there's both how many customers approach you. I think where we're seeing the biggest shift is the customers who've approached us very quickly want to move to, how would I change my enterprise to express it in a way that's most valuable according to my terms in your product? And then literally want to reorg. A shorthand version that we often use is, you used to have to take your company private to change the unit economics of it. Basically, just like we're providing venture results, high-end venture results to normal investors in the last couple of years, what we're doing actually in enterprises is providing a private equity-like transformation in the public markets, in the public space, under the current leadership. And that's essentially what our best, and by the way, the other thing Ryan would tell you about is our newer clients have much higher expectations of us. Like they're like, essentially, I want to transform my business. I want to do it in months. I want to do it in the public eye while being in the public market, mostly, not exclusively. And I want you to not only do the product side, but also tell us, how would you actually implement AI, Foundry, Ontology, FDE model, and our tribal knowledge to do that? And you know, it's a completely different game. We used to have to beg and plead to be like, you know, when we first started talking, we were begging and pleading to be at the margin of a problem that could affect a subset of the business. By the way, Shyam, you know, it's like, unfortunately, he can only tell you 1% of what he's involved in, but this is like exactly the same in the US government around the world. It's like the things that we're sitting on and working on are like crazy, crazy important, and they're not downstream of the problem, they are the problem, and we're reshaping them.
Thank you both. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera, and then you'll receive a prompt to unmute your line.
Afternoon, everyone.
Hello.
So I'm gonna do, as usual, a couple of questions, one on commercial, one on defense or government. On commercial, I'd like to follow up to Dan's question. And let's see if you can discuss what changed from a behavioral perspective, from a customer's perspective, to see this accelerated appetite to incorporate Palantir, to not only accelerating how many customers you have, but also the existing customers go up the value chain. And what changed internally as well? We recently saw in a visit these like AI agents or AI FTEs, like how are you incorporating tech internally to be able to accelerate and catch up with that demand? And on the government side, US government up 50% plus is really impressive. And how do you think about opportunities like Golden Dome going forward, piling up to this?
Well, you guys want to answer these questions? I think that there's the external one, which is like, what does it feel like? That's clearly you. The internal one is a really subtle question, and I don't know, anyone should jump in there, and then obviously should have Shyam opine on, yeah.
Yeah. Well, do you want to start with commercial or?
Sure. Yeah. I think on the external, I think it's like going deeper and deeper and more like tangible results with customers where there's a network effect incoming, like customers sharing impact that we're having and direct impact we're having with customers. Customers are seen as it's a continuation of what we've been doing, but going deeper and deeper with the customers on that impact. And I think that, what we're seeing is more and more are now coming to us saying, and the ones that are most impactful are coming to us saying, let's do more.
Ryan is our best at being a wonderful, I'll just give a vulgar version here. Our clients realize the choices suck, basically, and they've tried a lot of stuff. It hasn't worked. And then we're in so many verticals. Let's just say we're in vertical 252 and we dominate for one customer. People see that. And then they're like, oh, well, I'll try this with some, I don't know, knockoff, half fake thing. It's just like, and then a lot of people really still don't understand that are still trying to do this long migration where, LLMs are going to perform as if they're LLMs and ontology and as if the LLMs were not a commodity. But then in the marketplace, they see the final result of someone else using ontology, Foundry, FDE. And now it's like, wait a minute, I'm paying hundreds of millions of dollars and getting nothing. And the person down the road I kind of look down on is way ahead of me, and their unit economics are transforming overnight. And that just shifts the whole conversation. Because then we're like, okay, well, if you want it to work, you're going to have to do these 5 things. And these things are like, you're going to have to talk to Ryan, and you're going to have to, occasionally meet with me, and you're going to have to actually allow us to come in with engineers, and we're going to have to actually work on the problems that are valuable for your business, and also look at the costs that are dragging you down. By the way, the cost for most businesses is not just the actual money they're wasting. That wasted money creates an ecosystem of waste. They're talking to all these vendors all the time about all these things that will never work instead of solving the problem. It's like, and so getting the pathogens out of their business is a real issue, and now they're really, really interested in this. And then on the internal front, I would say, it's just, we have to double down. The most important thing for us internally is, with all this success, we do not want to give up the unique attributes of Palantir and somehow purchase fake ways for us that are artificial for us. And so making sure we are very, very close to the problem and making sure everyone here, like if you heard our internal dialogue, it's much more like, who's on the factory floor here? What are we doing internally? How do we make sure our products are better and better? How do we make sure, say, Sham, who's a savant at going around and figuring out what the underlying tech issue is? How do we making sure we have the best product team and the very, very exact right fit for every single deployment across our deployments that we care about, especially mission deployments, which we highly, highly overvalue in terms of our time and energy. And like, how do you make sure Palantir stays as tribal and cultish and unique as it was 20 years ago? How do we double and triple down on that? And how do we recruit the right people? And then internally we have, look, we power ICE, we power efforts to defend America and Ukraine, and with allies. We're on the front line of all adversaries, including vis-a-vis China. And we support, we're at ICE, and we've supported Israel. Okay, these are very controversial. I don't know why this is all controversial, but many people find that controversial. Okay, so how do you align people to focus on these things in a way that is actually beneficial for us and our clients? These are really hard and tricky issues that we spend a lot of time. I would say as an overarching thing, because what we found is the more we focus on our internal dynamics, the better our numbers are. That's why we have less salespeople and we have 77% growth in 75% of our market, 121% growth in US Comm. Please tell that to some of your friends. I don't even understand how they can look at these numbers and not drop the key out of their Motel 6 and just like say, they're bombastic numbers. But it's like internal focus.
I'll make the mistake of trying to follow Alex there and just say on the internal side with AIFDE, that's why we actually originally built it. Our headcount has grown roughly 10%, but revenue grew 63%. How are we doing that? We've made our FDEs wildly more productive. And I mean, so much so that we decided to give it to our customers, and we've started to make our customers more productive. When you have a note like the Army Vantage note, where the Army's consolidating into the Army data platform, you now have an army, literal army of green suiters who need to become proficient developers in the software. And you have a generation of green suiters whose first interaction with the software is going to be with AIFDE. They're going to be superheroes on day one. I think it's accelerating adoption, it's accelerating understanding, like the depth of adoption, not just are you using it, but how much of it are you really using, how much of it can you understand? And then quickly on your comment on the US government business, the number of opportunities out there are great. I can't comment on all the opportunities you mentioned there, but whether it's NGC2, the continued growth of Maven, I mean, we have, of course, America's involved with 3 conflicts right now in the world, from Europe, the Middle East, and in our own hemisphere right now. And things are getting a little spicy in Africa.
By the way, let me say something slightly political, and I'm not saying other people agree with this, but when people are attacking our soldiers for stopping fentanyl from coming to this country, I want people to remember, if fentanyl was killing 60,000 Yale grads instead of 60,000 working class people, we'd be dropping a nuclear bomb on whoever was sending it from South America. So it's slightly like we in this at Palantir, we are on the side of the average American who sometimes gets screwed because all the empathy goes to elite people and none of it goes to the people who are actually dying on our streets. And that's why, it's like when you have an open border, it means that the average poor American earns less. I know my fellow progressives believe having an open border is going to make things, but that's because they're actually repping elite people instead of the working class. And the same thing in South America, it's like, to believe our Constitution does not give us the right to stop 60,000 deaths a year of working class men and women is insane. And this country is right to stop that, and I am very proud. I don't know all the efforts we're involved in, but to the extent we're involved in these efforts, I and most Palantirians are very proud of this.
You're here.
Thank you. Alex, as always, we have a lot of individual investors on the line. Is there anything you'd like to say before we end the call?
We're rocking along. Please turn on the conventional television and see how unhappy those that didn't invest in us are. Enjoy, get some popcorn. They're crying. We are every day making this company better. And we're doing it for this nation, for allied countries, and also for what, and I never really like the term retail investors. How about sane people who put up their own money and fight for us? And by the way, you know, you are fighting for the right side of what should work in this country. Meritocracy, lethal technology vis-a-vis adversaries, products that spread GDP to working class women and men and women by making their value creation higher. And by the way, your bank account. And thank you for that.
Thank you. That concludes Q&A for today's call.
Well, everybody. If you are still out there, thanks for sticking around. That is the end of the earnings call. Looks like Palantir is basically flat since close, but that's going to wrap it up for this live stream. If you guys are still out there, hit the like button, hit subscribe, and join us live tomorrow again for AMD earnings at around 3:45 p.m. Eastern. All right. Thank you guys so much for showing up. See you guys tomorrow. Peace.